Hi guys, what's up? Myself Abhishek Bansal. I'm from Mumbai. I take law and audit for both CA Final and CA Inter. And today I'm starting with a marathon session for CA Inter audit. All those people are appearing for November 22 or May 23 because then the video remains the same. So you can watch this marathon. And this would be in English and 20-30% in Hindi. So it's Hindi-English mix. Maximum I will be talking in Hindi. Maximum I will be talking in English because Chennai, Nama Chennai. So all the students from South would love to watch this lecture because I just finished a batch in South and it was an amazing experience. So anyone who's appearing for May 23, November 23, you can buy the videos. The videos remains the same because there's hardly any amendments. If there's any amendment, it will be uploaded on YouTube. So if you want to buy any videos of mine, either law or audit, the prices are same, 6250 for Google Drive, 6750 for pen drive. You can visit www.letslearnindia.in or you can call on 844-844-8919. So we have every time we have a good results. This is for the law. So 82, Rajvi got 82 in December. Then Sakshi was 76, Rahi was 75. Good results. Okay, for December. And in Jan he was at 38. Audit was 69 marks. Rohit Tyagi, all the way from Ghaziabad. Okay. Now I'll be teaching you from the handwritten notes. Those handwrittens are the notes which I have dictated in the class. So Chennai people, you have those notes. Others, if you do not have these notes, you want to download it, you go to the video description, and there you will get the notes. You have to download it from there. These notes are written by one of the students, Monica. Amazing handwriting. She has written, very sincere, very decent student. She has written everything, and I would request each one of you who's watching me right now, you should be thankful to Monica, and she has done beautiful. She has drafted all the notes. So please bless her, because in CA we always require blessings. Okay, thank you Monica, God bless you, and all those who were the part of this session when I was taking live in Chennai. Guys, amazing experience we had. So let's start with all the topics. I'll be revising all the topics. So I hope it's beneficial to you. Let's start. So it says dividends. The first chapter we are doing is dividends. So anyone who have studied self or you have done from some other author, so you can open your notes. If you want this notes, it is in the video description. Any of your friends who want to attend or a live batch or a regular batch or a recorded batch, they can contact. You can see the ticker moving it. Let's learn India.in. You can visit that website or you can call on 844-844-8919. I hope I get to see you in finals. Finals might take law, audit and economics laws. That's paper number 6D, optional subjects. So if any of your friends wants to attend, they can attend. Guys, this session is only for the revision, only for the marathon. That's basically exam oriented things. If you want more guidance, more detailed lectures, you need to buy the Google Drive or the pen drive lectures. Okay, this I repeat, it's a disclaimer, it's only for the revisions. I assume that at least once you have studied. So because it will be very quick, okay. Sir, dividends. So in dividends, we talk about 5 sections, okay. 123, 124, 125, 126, 127. It says dividend. Dividend says, sir, dividend. So dividend are basically of 2 kinds, final and interim. Final is proposed by board. Acha sir, section which act ka? Sir, Companies Act 2013. Maximum people would be saying, sir, dividend is not there in the syllabus. People who have studied from someone else, it is there. If you open Company Audit chapter, you will see a content of dividend. Plus, there's a chapter called Audit of Items of FS. In that, they would be asking you. Okay, Ahmedabad people, if anyone is watching me from Ahmedabad, I have been there also. So guys, it's mixed English and Hindi. I have taken few chapters for you, so you can refer the entire marathon here. Okay. Sir, final and interim. Final is proposed by the board, declared by the members. Okay, at general meeting by passing ordinary resolution. Sir, interim is proposed by the board, declared by the board. At board meeting by board resolution. Interim is always proposed, declared by board. If in the exam they have only said about dividend, when they say only about dividend, so dividend is always assumed to be final dividend. Okay, so MCQ, probable MCQs. So section 1, 2, 3. What is 1, 2, 3? Sources. So section 1, 2, 3. Sources are 1, 2, 3. Section 1, 2, 3. Sources 1, 2, 3. So 1. Free reserves. Number 2. Current year's profit, previous year's profit, accumulated profits. But after providing depreciation and losses should also be set off. Third source is money given by CG or SG. If payment of dividend is guaranteed by CG or SG. Acha, in interim, sir, it is out of current year's profits and surplus in P&L account. Out of current year's profit or surplus in P&L account. So these are the sources of final, these are the sources of current year's profit. I mean for interim dividend. In exam, they will ask you, dividend is declared out of securities premium. Comment, sir, not allowed. Dividend can be given only out of these three sources. 1, 2, 3, section 1, 2, 3. Sources 1, 2, 3, section 1, 2, 3. Sir, dividend is given out of capital redemption reserves. Sir, not allowed because 123 is contraband. Then the next point says transfer to reserves. So transfer to reserves is basically voluntary or optional, it means the same. Previously, whenever a company used to declare dividend, they had to transfer some percentage of the profits to reserve. Today, in today's time, it is made voluntary. Okay. Next, section 127 that talks about your time limit for payment of dividend. Again, MCQ. Dividend is declared at AGM, it should be paid within 30 days of declaration. It should be paid within 30 days of declaration. Within 30 days. Acha, if 30 days you have not paid, that means there is contravention. Company, you are liable for simple interest at the rate of 18% per annum. Director, penalty for 1000 rupees per day and maximum 2 years imprisonment. 1000 rupees per day, maximum 2 years ka imprisonment. Company, simple interest at the rate of 18% per annum. Director, 1000 rupees per day and maximum 2 years ka imprisonment. Okay. However, penalty will not be levied in the following cases. Penalty will not be levied in the following cases. DDLG. D. Sir, no default of company. If company has not defaulted, no penalty. Any direction given by the shareholder could not be complied and the same has been communicated to shareholder. For example, shareholder has told to me, okay, sir, you please declare the dividend, you pay, you transfer dividend through ECS, but his ECS is getting bounced because his account has been closed. So the same I have communicated to the shareholder. Sir, there was a direction given by the shareholder, it could not be complied and the same has been communicated to shareholders. L, operation of law. Law has said not to transfer the dividend, we will not transfer. J, jhagda. Jhagda means there is a dispute. In Hindi we say it is jhagda, dispute. There is a dispute to receive dividend, or the fifth point, amount is lawfully adjusted against any limit due by shareholder. People appearing for group 1 also, this chapter would be useful for your inter laws because the chapter is same. So no default of company, direction given by shareholder could not be complained, the same has been communicated to shareholder. Else it's operation of law. J, it is jhagda. Jhagda means dispute. Fifth, amount is lawfully adjusted against any limit due by shareholder. Amount is lawfully adjusted against any limit due by shareholder. Clear? In DDLJ there will be no penalty. So MCQ mein they can ask you. Sir, revocation. So dividend once declared cannot be revoked. Dividend once declared cannot be revoked. However, it can be revoked in two cases. One is ultra vires or going concern. Ultra vires like beyond the powers, going concern is like loss by fire. You have declared the dividend, now you can't pay the money. So in that case you can revoke. Revoke means cancelling. Sir, dividend once declared should be paid within 30 days. It should also be claimed within 30 days. So who will claim it? Shareholder will claim it. Okay. If 30 days is not claimed, company has to transfer this amount to unpaid dividend account. In unpaid dividend account, it will be staying for 7 years. After 7 years, it will be transferred to IEPF. IPF is Investor Education Protection Fund. Okay. Sir, money to you have to transfer only. साथ में you will have to transfer shares also. Money तो जाएगा ही जाएगा, shares भी जाएगा. Money also should be transferred, shares also should be transferred. Sir, company has declared dividend, it has to pay within 30 days. It has also to be claimed within 30 days. If it is not claimed within 30 days, then company will transfer it to unpaid dividend account. तो unpaid में जाने के लिए days are 7 days. Unpaid में जाने के लिए days are 7 days. अच्छा, but you have transferred on 10th day. So there's a default of day 8, day 9, day 10. 3 days का default. So those benefit, the interest would be levied and that interest benefit would be also be given to the shareholder in proportion to the amount of dividend. The interest percent is 12%. If there's a default, the percentage is 18%. Here it is 12%. Okay. Acha, unpaid it will be sitting for 7 years. After 7 years, it will be going to IPF. Correct? IPF. So after 7 years, within 30 days, it should be transferred to IPF. See, unpaid say, unpaid means the days are 7 days. There's a default, 12% per annum interest would be levied. Acha. After 7 years, if you are transferring to IPF, to go to IPF, the days are 30 days. MCQ it is very useful. Sir, if section 124 is contravened, what is 124? Sir, unpaid ka section is 124, IPF ka section is 125. Unpaid is 124, IPF is 125. So if 124 is contravened, company liable for 1 lakh, is this 1 lakh? 1 lakh. 500 rupees per day subject to maximum of 10 lakh. 500 rupees per day subject to maximum of 10 lakhs. Officer, 25,000 rupees, 100 rupees per day subject to maximum of 2 lakhs. MCQ it will be useful. MCQ. Okay. Now, so this is 124, 125. 123 was sources, 124 was unpaid, 125 was IPF. 126 is abeyance. 126 is abeyance. 127 is time limit for payment of dividend. Abeyance is pending. Okay. Sir, dividend is to be paid out of the past profit which have been transferred to free reserves. Correct? Past profit which are transferred to reserves. It is allowed as a source under section 123. Free reserves, current day's profit, accumulated profit after providing depreciation and losses should also be set off. Third, money given by CG. Payment of dividend is granted by CGSG. So today, if you have loss, you have no profit, you can use previous money. Correct? It is given as a source in 123. But sir, there are certain conditions to it. There are certain conditions. What are those conditions? In case of inadequate profit or absence of profit, inadequate profit or absence of profit, the company can declare dividend out of the past profits, which have been transferred to reserves, provided by complying with three conditions. What are those three conditions? You have done this already. So my rate of dividend should be less than or equal to. My rate of dividend should be less than or equal to average rate of dividend in the last 3 years. See, whenever you had money, you are given a lot of dividend. This year you don't have money. So sir, please do one thing, take care of the rate. So please take care of the rate. When amount was there, when profit was there, so you gave huge dividend, right? But today there is no profit. So please take care of the rate. Rate of dividend should be less than or equal to average rate of last 3 years. However, and forget the last the middle part, we'll do it at a later stage. It says, chalo, let's do it. This sub rule shall not apply to a company which has not declared any dividend in each of the last 3 years. Has not declared any dividend in each of the last 3 years. Year 3, 0. Year 2, 0. Year 1, 0. 0 plus 0 plus 0 will give you 0. Correct? So this rate wala condition will not be applicable. Okay? And amount withdrawn should be less than or equal to 10% of paid up capital and free reserves, and this amount should be first utilized to set off the losses incurred in the current year. So first you will set off the losses. My amount withdrawn from reserve should be less than or equal to 10% of the paid up capital and reserves, and balance of reserves after withdrawal should be more than or equal to 15% of paid up capital. 15% of paid up capital. Either it is 15, here it is 10. Okay. So if these conditions are satisfied, if these three conditions are satisfied, boss, you can give dividend out of the past profit which are transferred to reserves. Past profit transferred to reserves. In audit paper, they will ask you condition as an MCQ, not a theory answer. Theory mein they can ask you about sources only. Okay. Sir, if carry forward profit is not transferred to reserves, that means profits are carry forwarded. Okay, and it is utilizing the same for the payment of dividend, then it can do so without any restriction. It can pay dividend. So you don't have to comply any condition, you can pay dividend. The words are very clear. Past profit transferred to reserves. 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 Then only past profits transferred to reserves. Then only you will be following condition 1, 2 and 3. If past profits are not transferred to reserve, you are paying dividend today out of the past profit which are not transferred to reserve. No condition is to be seen. Okay. Then important points. In case the company has losses, in the current financial year, up to the end of the quarter, immediately preceding the date of declaration of interim dividend. Sir, quarter 1 mein there is a loss. But in future we will have profit, right? Current year mein you want to pay dividend, pay. But please take care of the rate. Dhanda kar par ganda mat kar. Take care of the rate. Rate is what? Rate of interim dividend should be less than or equal to average rate of dividend of last 3 years. Rate of interim dividend should be less than or equal to average rate of last 3 years. My rate of interim dividend should be less than or equal to average rate of last 3 years. Clear? Then, the amount of dividend including interim dividend shall be deposited in a scheduled bank within 5 days of the declaration. Very, very, very important MCQ. The amount of dividend including interim dividend should be deposited within 5 days of the declaration in a scheduled bank. So from there only you will pay the dividend. 5 days. Okay, very, very important. As per section 91, the company can close a register of members, debenture holders, other security holders for maximum 45 days in a year. And at one time it is maximum 30 days. So continuation mein it is 30 days and for the entire year it is 45 days. Okay. Then dividend may be paid in either cash or check or warrant or electronic mode. Dividend may be paid in cash, check, warrant or electronic mode. That means it cannot be paid in kind. Achha, if the company fails to comply with section 73 and 74, there is prohibition on the acceptance of deposits and repayment of deposits. It shall not declare dividend so long as the failure continues. Boss, if you have defaulted in acceptance of deposits and repayment of deposits, you cannot declare dividend so long as the failure continues. MCQ ka point. MCQ. Done. Dividend chapter is over. Dividend chapter is over. Done, done, done. So, one chapter we have done. So, in my book, I think we have 18. No, let me just see. So, all those people who have attended the batch, you have my book, right? So, there are 18 chapters, okay? 18 topics. So, on 18, we have done with dividend. I'll just mark. So, we are done. 15 minutes. Whoa, brother. It's a revision session, quick exam revision session. Dividends. Finish. Samap. Zala. Thaigu. Patigu. Over. So, first chapter, dividend is Swaha. Done. Next chapter, automated environment. Next chapter is automated environment. Please open the book. Automated environment. Let's move on to the next chapter, that's called as automated environment. Automated environment. Okay? Short chapter, minimum 4 marks in the exam. Short chapter, 1 or 2 marks you will see in MC. That's total 6 marks weighted chapter. Sir, first question, what is automated environment? So, automated environment means in a business environment where people, process, operation, accounting and even decisions are carried out by using computer system known as information system or information technology system. It's a definition. So, automated environment means a business environment where process, operations, accounting, decisions. So, PAUA we say, PAUA, process, operation, accounting and even business decisions. Even business decisions are carried out through how? By using computer system which are called as information system or information technology system. The key features of automated environment are false LIC, F. It enables faster business operation because everything is automated. Myntra, Amazon, net banking, RTGS, NEFT, everything is automated, right? It's like quick. There's an accuracy in the data processing and computation. L, it helps to process large volume of transactions. S, it provides better security and controls. E, less prone to human errors. L, provides the latest information, integration between business operations and connectivity and networking capability. So 4 mark answer, what are the key features? What is automated environment? What are the key features of automated environment? So automated environment means a business environment where PAUA, process, operations, accounting and even decisions are carried out by using computer system known as information system, information technology system. The key features are false LIC. F, enables the faster business operation, accuracy in data processing. L, processing large volumes of transaction. S, better security and controls. E, less prone to human errors. L, provides latest information, integration between two business operations. And C, say complex connectivity and networking capability. False LIC, first answer. Number 2. Sir, what is the relevance of IT in audit? Why do you need IT in audit? Yes is there now. Why do you need it in audit? Because of CABRU. It is used in following ways. That is called as CABRU. C. Sir, for computations and calculations are automated. For example, bank enters, computation, inventory. So example also you need to write in the exam. A, for accounting entries which are posted automatically. For example, sub-ledger to general ledger posting are automatic. B, business policies, procedures including internal controls are applied automatically. Sir, for computation, calculations, accounting entries are automatically posted. Business process procedures are applied automatically. R, reports used in business are produced from systems. Management and other stakeholders relies on this report and information produced. So reports are produced from the system. U, user access and securities are controlled by assigning system roles to the user. For example, segregation of duties can be enforced effectively. So 4 mark answer, what is the relevance of IT in audit? It's a CABRU. C, computation and calculation are calculated automatically. A, accounting entries are posted automatically. Business processes, procedures including internal controls are applied automatically. R, reports used in the business are produced from the systems. And U, user access and securities are controlled by assigning system rules to the user. Done. Third, How as an auditor you will understand the automated environment? Document and understand. Oh, understand, document. Exam question, May 22, I think, exam question. For understanding you will use the essay number is 315. For documenting you will use the essay number as 230. For understanding you will use the essay number as 315. For documenting you will use the number 230, documenting. Sir, as per essay 315, the auditor needs to obtain the understanding of the entity's business environment including automated environment. Okay? Following points shall be considered. So for understanding you will use essay 315. The code is VIP Alok. The code is VIP Alok. VIP Alok. Sir, we say. So you will consider versions. Sir, functions and the risk could vary in different versions of same application. Versions. You can open in your book, you can see that answer. VIP Alok. V, versions. I. So what is the information system being used? You are using Mac, you are using OS, you are using any other operating softwares. So what is the purpose, whether it is financials or non-financials? Versions, information system and purpose. For example, Tally I use, SAP I use for accounting. I use maybe like CCTV's thumb impression for my non-financial data like user access and access to the room, entry and exit points I need to check. That's purpose. Versions, information system being used, their purpose. Next. Architecture, I think the sound was not there. A was architecture, L was location of the IT system, O whether it's outsourced, IT maintenance and support. K say key persons is that CIO, CISO, administrators. Okay. So the code is VIP Alok, VIP Alok. So in the exam the question is how would you understand and document? For understanding you will use essay 315. Following points should be considered for VIP Alok. Now this is documentation. The understanding of the company's automated environment should be documented as per essay 230. So for understanding you will code 315, for document you will code 230. In the exam they had asked for the example also. So example of a template that can be used for documenting or understanding is illustrated below. So you can use anything SAP, version is 2.v, 2.1, 2.2, purpose for accounting, location local versus global, and architecture is what, in-house versus package, and key persons, VIP Alok. Cool. So that's your third answer. How would you understand and document the automated environment? Fourth. Sir, what are the risks arising out of IT system? What are the risks arising out of IT system? Lucifer, if you have studied, Lucifer. Sir, yell, loss of data, IT system and data can be lost. Hard disk got corrupted, you unauthorized access to the data or direct data changes. Someone access your computer, laptop, your mobile phone, unauthorized access to data. Sir, C, unauthorized changes to the systems or program, changes to the systems or program. I, inaccurate processing of data or processing inaccurate data. Inaccurate processing of data or processing inaccurate data. Loss of data, unauthorized access to data, unauthorized changes to systems or programs, or inaccurate processing of data or processing inaccurate data. F. Sir, failure to make changes to the systems or programs. E say, any excessive access or privileged access, that is super user. Like one person is driving more car or one person using like 10 people are using one laptop. So obviously sir, there would be fraud. There would be always a risk. Lucifer. Important answer, do it again. Lucifer. Read. I'm here only, read. Done hai? Lucifer. Fifth, what is the impact of IT risk on change in audit procedures? What is the impact of IT risk on the change in audit procedure? So this is the fifth question. Impact of IT risk on change in audit procedure. Sir, we may not be able to rely on the data obtained from the system where such risk exists. This means that all data, information or reports obtained from the system has to be thoroughly tested and corroborated, matlab supported for strong completeness and accuracy. You have to check everything. Secondly, we may not be able to rely on the controls, calculations and accounting procedure, and thus additional work may be required in this case. Thirdly, because of any regulatory requirements, the order to report on IFC, internal financial control of the company, the audit report may be modified in some instances. In all the above cases, the auditor would be required to obtain more evidence and perform more audit procedures. That is basically more additional audit work. So this is fifth question. What is the impact of IT risk on the change in audit procedures? Why do we need to change the procedure? Because there is probability that you will not be able to gather all the information. Also, if the system is not proper, the calculation would be wrong, and there's a regulatory requirement to report on internal financial controls. So that's the reason we need to gather more evidence and perform more additional work. Okay, read. Do it again. Fifth answer. Done? Fifth answer. Sixth. Sir, what are the types of controls in automated environment? Types of controls in automated environment. Guy. Sir, general controls, application controls, IT dependent control. Guy. General control, which is applicable throughout the system. That's basically user access, thumb impression, CCTVs. So in general control, these controls are policy and procedure that relate to many applications, support the effective functions of application controls. Main password for the PC. Okay, main password for the LAN connection. It includes control over the following, which is called as DAPA. Sir, data center or network operations, express programs or security change. This is program change. Okay, this is program change. A, it is access securities. P is program change, and A is application system acquisition. DAPA, data centers and network operations. A, it is access securities. P is program change. A is acquisition, application system acquisition. It says to ensure that the production systems are processed to meet the financial reporting object. That's called data center network operations. So access securities, to ensure that the access to programs and data is authenticated, authorized to meet the financial reporting objectives. So P, program change, to ensure that the modified system continue to meet the financial reporting objectives. A, application system acquisition, to ensure that the systems are developed, configured and implemented to meet the financial reporting objectives. DAPA, data centers, access securities, program change, application system acquisition. Then application controls, these are both automated and manual controls. This operates at business process level. Like for example, for discount, for sales, you have an application control. Examples are edit checks, validation of input check, sequence number check, user limit check, Netflix user number limit check. Only 4 people can have access. PDF, compulsory questions, you can't move aage, right? That's an application controls. Mandatory data fields, IT dependent controls. These are manual controls that makes use of some form of data or information or a report produced from the IT system and application. Even though the controls performed manually, the design and effectiveness would depend upon the reliability of source data. Performing reconciliation based on the computer generated data, that means basically you are checking. So anything which is out, that is called reporting, it is an IT dependent controls. General controls is CCTV, main PC ka password, okay, main room ka access. Application controls, control which are embedded into the application, like mandatory data fields, user limit checks. IT dependent control means a report. Very important, be repetitive. Yeah? Please read the answer, I'll scroll. Types of control guide, general, application, IT dependent. I'll scroll, read. Next answer. It says mention the procedure for performing tests under IT environment. Mention the procedure for performing tests under IT environment. Okay. So these are basically techniques. So there are 4 types of audit tests that should be tested. That is basically OICI ka point we will use. That's called inquiry, observations, re-performance, inspections. So we have learned this code called OICI if you remember. So observation, re-performance, inspection and inquiry. So this is not, CA is not there in this. Okay, OICI. Sir, inquiry. Very important MCQ. Inquiry is the most efficient audit test, but it gives least audit evidence. Re-performance is most effective, but it is not efficient. Inquiry is efficient, re-performance is effective. Inquiry alone cannot be used. It should always be used in combination with other audit testing methods like OICI, ORAICI, but CA is not there. Applying inquiry in combination with inspection, II. Inquiry, inspection is the most effective and efficient audit evidence. So, sir, inquiry is efficient, not effective. Re-performance is effective but not efficient. Inquiry along with inspection is most effective and efficient. MCQ, correct, incorrect, for sure you will see. Achha, which audit test to be used when in what condition is a matter of the professional judgment of the auditor. What to be used, when to be used, it will be decided as per the heart of the auditor. Heart, Korean heart. Heart is called as what? Correct, judgment. Some of the common methods used are obtaining the understanding of the how automated transaction is processed, then observing how user processes transactions under different scenarios, inspecting the configuration defined in an application, and inspecting the system logs to determine any changes during the last audit testing. So 4 mark answer. What are the audit tests for automated environment? So the techniques are, sir, ORAICI में से CA would not be there. Observation, re-performance, inspection, inquiry. Inquiry is most efficient, re-performance is effective. Inquiry cannot be used alone, it has to be used in combination. Inquiry along with inspection is most effective and efficient. What to be used, when to be used, how to be used is a judgment of auditor. And then 4 points of the procedure. What is the procedure for performing tests under IT environment? Okay. Next. 8th answer. Data analytics. Repetitive. Data analytics. CART. You must have studied this. So it says the combination of process, tools and techniques which are used in the vast amount of electronic data to obtain meaningful information is called as data analytics. So from the raw system, raw data, you obtain meaningful information. From the raw data, you involve meaningful information. It is called as data analytics. The tools and techniques which are used in data analytics are called as CART. The tools and techniques which are used in data analytics are called as CART. Data analytics are used in testing electronic records by using spreadsheets and specialized audit tools like IDEA, ACL to perform the following. So you use spreadsheets also, and then you use specialized audit tools also like IDEA, ACL, interactive data extraction analysis. ACL is audit command language. Those are software names to perform the following. Why do you use data analytics? To check this thing. Check completeness of data. Exam question. What are the benefits of data analytics? Completeness of data, selection of audit sample, recomposition of balances, re-performance of mathematical calculations, analysis of journal entries, and evaluating impact of control deficiency. So 6 points. Benefits of CART. So definition of CART, data analytics and benefits. And a suggested approach. Suggested approach to benefit from the CART is given below. There's a story. Sir, we want to do the CEO course, understand the business environment including IDT. We have to clear in the first attempt, define the objectives and criteria. We require notes. So notes will get it from ICI site. So identify source and format of data. You downloaded the notes, extract the data. You check the applicability of those notes, verify the completeness and accuracy of the extracted data. Then give the mock paper, let's apply the criteria on the data obtained. Give the actual paper, validate and confirm the results. We became CA. Report and document the results and conclusion. We became CA. Done. So there are 3 answers: definition, benefits, suggested approach for CART. So they can ask you anything. Read it again. Data analytics. I'll scroll slowly. In case if you do not have the notes, read. Done. Now, how as an auditor you would report with regards to IT environment? It says refer question 7 page 28 in the main book. अब जिनके पास नहीं है, people who do not have the main book, so you can click the photo or you can refer in your teacher का book. One second now. Refer question 7 page number 28 in the main book. Page number I think it's wrong. Automated environment 280. Question number 7. 282. This is the reporting. This was also asked in the exam. So you can click the photo, you can check it in your book. This is also an important question. It says reporting consideration. So at the end of each audit, there will be certain findings or exception in the IT environment and IT controls that needs to be assessed and reported to the relevant stakeholders, including management and TCWG. So some points to be considered. What are there any weakness in the IT systems? What is the impact of those weaknesses? We will report the deficiencies to the management through ICMO, that's basically internal control memo or management letters, and you will communicate any significant deficiencies at the top level because those start with governance. The auditor needs to assess each findings and exceptions to determine the impact on the audit and evaluate if the exception, the difference, results in deficiency of internal control. 4-mark answer. After completion of audit, there would be certain findings or exceptions, okay, which needs to be assessed and reported to the relevant level of management. Okay, that's stakeholders हो गया, आपका management हो गया, TCWG हो गया. Some points to be considered. Number 1, are there any weaknesses in the IT controls? What is the impact of those weaknesses? You will report the deficiencies to internal controls memo or management letters. Communicate in writing any significant deficiency to the top level. Those are with governance, and the auditor needs to assess each deficiencies or findings to determine whether the deficiencies there are results in significant deficiencies in the internal control. Understood? So question number 7, page number 280. This is the one question you need to do it from here. Page number 282. So people who do not have this book, I mean, you can click the photo, or else you can refer into your notes, or module. Then explain IFC and ICFR. What is IFC? So IFC is the policy and procedure established by the company for ensuring dolare. Prevention and detection of frauds and errors. O. Efficiency and effectiveness of the operations. Detection and prevention of frauds, sir. Then efficiency and effectiveness of the operations. L. Applicable compliance with the applicable laws and regulations. A. Safeguarding of assets. R. Reliability of financial reporting. Very important, and one RTP on my MCQ in the class I had solved this. They play with the words dolare. Prevention, detection of frauds. O. Efficiency and effectiveness of the operations. Compliance with applicable laws and regulations. Safeguarding of assets. Reliability of financial reporting. Sir, IFCs are applicable to all the companies. All matlab all. However, in case of listed companies, the directors will state the IFCs in place and are operating effectively. The director will state in DRS. that IFCs are in place and are operating effectively in DRS. Director's responsibility statement. It is applicable to all companies. However, the listed company directors in their director's responsibility statement, they will state that IFC is there and it is operating effectively. Achha, the independent directors, audit committee and the start auditors are also responsible for efficiency of IFC. Everyone is responsible. So as per section 143(3)(I), the auditor will state that the IFC is in place and it is operating effectively. In audit report also, auditor as per 143(I) wala point, he will state that IFC is there, it is operating effectively. However, this is not applicable to a private company. Which private company, sir? Which is OPC, small company, or other private company. Other mein turnover is less than 50 crores or loan is less than 25 crores at any point of time from bank or financial institution or any body corporate. 1 second now. I need to check whether the condition is and or. 1 second now. and. It is and. This is final Sega book. And. So I think there's a mistake there. She has not written it. You write in the notes it is and. It's okay, absolutely okay, it happens. Turnover is less than 50 crores and my loan is less than 25 crores at any point of time from bank, F or any body corporate. That means if I'm the auditor of a private company, I will report on all the points except IFC wala point. We have done this in the class. Important 2 mark MCQ, 1 mark MCQ, descriptive also. This point, auditor will report that IFC is there and it is operating effectively for all the companies except a private company. Which is a private company, OPC, small or other. Other में turnover is less than 50 crores and loan less than 25 crores at any point of time from bank, F or any body corporate. Okay. Then there are few questions you need to do it from the module. Refer question 157 of correct incorrect, page number 6.26, ISM, Chennai people, ISM, and 6, 7, 8, 9 theory question from 6.27 module. So this 3 MCQs, 3 correct incorrect and 4 questions from the module, you need to do it. Okay guys, so we are done with 2 chapters. We are done with dividend also, we are done with automated environment also. So in automated environment, I would say, how many questions are there? Data analytics, then there is reporting is 9, 10th is your IFC, So 10 questions and plus 3 correct incorrect here and 4 questions. So 14, ideally 14 questions are there. So these questions, click the photo or else we can mark in the module that you need to do it from the module also. 3 correct incorrect and 4 questions from the module. So we are covering the content also, we are covering the module also. Revise through this only. If you are walking, if you are going somewhere, close my video, just listen to the audio, quickly it will be recalled, okay. We move on to the next chapter. Sure.
So see, we are revising fraud right now. Fraud ka weightage is minimum 3 mark. It can go to 5 also, it can go to 6 also. Okay. Now when you say fraud is intentional or unintentional?
Intentional.
Fraud is intentional. Okay. Misstatement in the FS can arise due to 2 reasons. One is fraud and other one is error. As an auditor, you are interested in intentional misstatements or unintentional misstatements? Intentional misstatement. Okay, fraud ka all the answers are written in one essay. That essay is called as essay 240. Okay, it's 2 and 0 240. It says what is fraud and what are the characteristics of fraud. So as per essay 240, the name of the essay is Auditor's Responsibility relating to fraud in audit of FS. Auditor's responsibility relating to the fraud in audit of FS. Okay, that's the name of the essay. You need to write it every time. Now, fraud means an intentional act. You know it, you are doing wrong things done by one or more individuals in the company. Now, in the company, who are those people? Among the management, TCWG. What's the full form for TCWG?
Those charged with governance.
Those charged with like the director, the CEO, CFO, CS, employees or third parties, including the use of deception to obtain an unjust or illegal advantage. You know that you are doing wrong thing, you are getting benefit, but someone else is getting harm. That is called as fraud. So as per essay 240, the definition of fraud is this one. It is an intentional act done by. It is an intentional act done by the management, one or more individual among the management, TCWG, employees, third parties, including use of deception to get unjust or illegal advantage. Misstatement in the FS occurs due to 2 reasons. One is intentional, which is called as fraud. Other one is unintentional, which is called as error. As an auditor, we are interested in both, but we are more interested in what? Auditor is more concerned with the intentional misstatement. Okay. Now, intentional misstatement, which is fraud, arises due to 2 reasons. One is FFR. FFR is what? Fraudulent financial reporting. And other one is MAHA. What is MAHA? Misappropriation of asset. FFRA, MAHA. Okay. So what is the SA number for fraud?
240.
SA 240. Okay. Fraud arises due to 2 reasons. One is FFR. FFR is fraudulent financial reporting. Other one is MAHA. MAHA is what? Misappropriation of asset. This much clear? So if you see a question, what is fraud? What are the characteristics of fraud? You will write this answer. Okay. Now we are doing FFR. So first we will do FFR, then we will do MOA. Okay. What is FFR? How does FFR happen? So how is fraudulent financial reporting achieved? So the first question was what is fraud? What are the characteristics? In that, there's one question called as what is FFR. So FFR is basically understood in three words: fraudulent, financial, reporting. So I know that I am doing something wrong. That's called fraudulent. Financial reporting means FS my mistake. Can you tell me what is FS?
Your balance sheet, P&L,
Balance
cash
sheet, P&L, cash flow notes. So who prepares the FS?
management.
Management. So when management is preparing the FS, Jan intentionally they are preparing wrong things. Now how do they prepare wrong things? Sir, by manipulation or falsification. By manipulation or falsification. That means they are showing some amount. They are showing some amount, but they are showing it wrong amount. How it can be achieved? Sir, manipulation falsification can be achieved by inflating or suppressing the purchase or expenses, inflating or suppressing the sales and other income, like purchase and sales, expense and income, inflating or deflating the valuation of the inventory. You're showing it, but you're showing it wrong amount. Charging items of capital to the revenue or vice versa. This is falsification or manipulation. That means you're showing it, but you're showing it wrong amount. Number two, misrepresentation or intentional omission. Misrepresentation or intentional omission relating to events, transaction, other significant information. The misrepresentation or intentional omission. Like an event has happened, like for example, loss by fire has happened. We have not shown it only. So we have omitted it. We are preparing the accounts, but we are not recording in any important significant event in the books. That is called as misrepresentation or intentional omission. Third, intentional misapplication of accounting principles, like related to ACPD. What is ACPD? Amounts, classification, presentation, disclosure. Bad debts. Sorry, inventories. How do you value inventories? How do you value stock?
As per AS2,
AS2. What is that in AS2?
is an accounting standard.
Cost or NRV, whichever is less. As per AS2, you value inventory at cost or NRV, whichever is less, but you're valuing it only cost. That means it's a departure from AS2, right? So you are applying accounting principle intentionally. I mean, you're misapplying the accounting principles intentionally. So that means your accounts, may whatever data you have shown, it is a wrong thing. You know you are doing wrong thing. It is called as FFR. FFR can be achieved by three reasons: manipulation, falsification, showing it but showing it wrong amount, misrepresentation, intentional omission, not recording it only. Third, recording it but applying accounting principles the wrong way, intentional misapplication of accounting principles. Okay, that's FFR. Number two, how is misappropriation of assets takes place in a company? Misappropriation of assets. See, now assets may fixed assets also, current assets also. So it happens due to two reasons. One is misappropriation of goods. Other one is defalcation of cash. For example, defalcation of cash is very important. Okay. Misappropriation of assets take place by two ways. One is MOG. MOG is misappropriation of goods. Other one is defalcation of cash. Defalcation of cash is very important. A misappropriation of goods. Like in a factory, goods are kept. How can you decide it's misappropriated? Like what do you mean by the word misappropriation?
Something wrong.
Like something wrong, what that something is wrong? You're using the goods of the entity without letting them know. That is misappropriation. Like you are a warehouse keeper, you're removing the goods, but you are not supposed to, but you're removing the goods. I give an example here of remdesivir. Like in COVID times, see the company was supposed to give it like the MRP only, but the person who was handling the warehouse, the person who was delivering the goods, they misappropriated it. Like for example, the manager said 5 units should be dispatched, but rather than removing five, they removed 10, and then other five they were selling it at in black. So your internal control system is very important. Internal control system is very important. Theft, again, there was no theft, but it is the warehouse keeper is showing that the goods have been robbed away. Okay, that is basically misappropriation of goods. So in a big company, like for example, Parle-G or a Maggie company, like any FMCG company. So the volume is so high, the value is very less, but the volume is so high, like even though one or two units are getting, it's getting destroyed or it has been stolen away, it cannot be detected by the higher management. So it says misappropriation of goods is very difficult. It's very difficult to detect, and for this, management has to rely on various measures: ICS, warehouse keeper, honesty of the employee. So record keeping about the physical quantity and their periodic checks are few measures to detect the misappropriation of goods. Okay. Now there should be arrangement to see no goods are taken out without proper authority. That ICA should be there. Goods may be removed by the subordinate employee only or even by the persons quite higher up in the management. So they can do a fraud. Like top management can also do, like senior management can also do. Like for example, you require the injection for your home. You have taken one injection. I am your boss. I call to you, Chatulya, do one thing. You remove the goods. You remove the goods. You send 2 units to my house. So you are saying, sir, but I require authorization of Mr. A. But I am telling you, I am the boss. I am the owner of the company. You remove it. So without following the procedure, you are removing the goods, right? So it can be done by the lower level employee also. It can be done by the higher level employee also. Okay, that's misappropriation of goods. Defalcation of cash, very, very, very important. So how it can be done? It can be done by inflating cash payments, suppressing cash receipts, or wrong totaling in the cash payment. So inflating cash payments means you're making the payment 100 rupees you are supposed to pay, but you're paying 150 rupees. Like people in their article ship, they do all this. Like they travel by auto, 80 rupees ka fare has come, but they will take reimbursement of 100 rupees, right? So you're making payments against fictitious vouchers. What is fictitious?
Oh, it's not real.
Fake, bogus.
Fake,
Okay.
bogus.
Making payments against voucher where the amounts have been inflated, like 80 ka 100. Okay. Then manipulating a total of wage rolls, like employee ka salary structure. He has taken leave, but you're not deducting the payment. Casting larger total for petty cash expenses and adjusting the excess in the total column. Like you have removed 1,000 rupees for petty cash. Okay, inner column you're showing 30 rupees for tea, 20 rupees for coffee, 10 rupees for some other expenses. Even though the expenses have not incurred, but like small amounts the accountant is doing. So that's basically inflating the cash payments. Suppressing cash receipts. The most important technique here is teaming and lending. You remember teaming and lending?
Yeah.
What is teaming and lending?
Where you take cash receipts from one customer and apply it to another customer.
So the receipt from one customer is credited to the earlier customer,
Yeah.
so that the account does not show outstanding for a long period of time. It is used to inflate and
To
suppress cash payment and cash receipts.
cash receipts
Cash receipt, data from data or creditor,
from debtors.
from data. All the three words are MCQ. It is a technique which is used to suppress the cash receipt from the data. Okay, correct, incorrect, or MCQ. Now, sir, cash receipt, what else can come? Not accounting cash sales fully. Like we have sold 100 rupee ka goods, but we are recording only 90. Not accounting for miscellaneous receipts, like sale of scrap, bhangar and all. Sale of scrap, you're not recording it. Okay, and adjusting unauthorized allowances, rebates, and misappropriating the amount paid by them. For example, my accountant, he is showing in the books that he has sold audit lecture at 5,000 rupees. The MRP is 6,000, but he has sold at 5,000 rupees. Even though he has sold at 6,000, but he has shown the discount. 1,000 rupees he has taken for his own benefit. So that is basically suppressing cash receipts. So defalcation of cash can come in this chapter also, I mean the fraud chapter, and it can come through the chapter of nature of auditing, the first chapter, nature of auditing. It can come through that also, okay, defalcation of cash. Now, fourth question. You need to hold a word here which case is management override controls. Sir, what are the techniques by which management overrides the controls? Who establishes a control system?
The management.
Management. So now, for example, we have established a control system that whenever the goods will be moving out of the warehouse, Mr. A, Mr. B, Mr. C will be signing it off. Okay. You are a warehouse keeper, assuming we are selling some FMCG good. So I call you, Acha, so do one thing. Send 100 units in at my house. So you are saying, sir, but I need Mr. A, Mr. B, Mr. C approval. And today is Sunday, they will not give the approval. So I tell you, I am your boss. I am telling you to dispatch the goods. Sir, but approval has not been taken. I am telling you, if you don't do this, I will not give you a salary. I will remove you immediately. So controls were established by the management, but they are overriding the controls. So overriding means
Overthrowing, overpowering.
like you're not following it, you're not complying it, you're misusing it. Okay, that's management override controls. Like for example, first reason. So the code is CA C. Concealing or not disclosing the facts which could affect the amounts recorded in FS. You're hiding things. Engaging in complex transaction like Adani ka fraud. Engaging in complex transaction to misrepresent the financial position of the entity. So C said is concealing. C said is complex transaction. Okay. A. Altering the records related to significant and unusual old transactions. Like related party ka transactions. You're altering the records. Recording bogus entries, fictitious journal entries near the account year end period. Like around 31st March, if there's a profit, company will pass bogus entry. They will make a payment and then they will take the cash from the person whom they have made the payment. So accountant says, sir, I will not make any bogus entries. But the director said, if you don't pass bogus entries, we will remove you immediately. So he is not wanting to pass bogus entry, but management is saying to pass bogus entry. Adjusting the assumptions and changing judgments which are used to estimate account balances. You are our debtor. You said you will pay in the month of April, but we are creating a provision for bad debts. Why? Because we have a lot of expenses to pay off. And sorry, we have a lot of profit. If there's a profit, we are supposed to pay taxes. So we are adjusting the assumptions, judgments, like provisions. Oh, omitting, advancing, dealing events which have occurred during the reporting period. For example, on 28th March, we made a sales of 5 lakh rupees. Now, if we're recording the month of March, we will have to pay taxes because that would be profit. So we delay it 2nd April. Or else we have not shown only in the books 5 lakh sale, forget it. Because if I show 5 lakh sale, I will able to pay GST on that plus income tax on that. So I have not shown it all. So the CA Rao, the techniques which these techniques are used by the lower level employees or the senior level employees.
By the senior level employees.
By the senior level employee. Okay, the code is CA concealing or engaging in complex transaction. A. Altering the records. R. Recording fictitious journal entries near year-end period. A. Adjusting assumptions and changing judgment which are used to estimate account balances. O. You are omitting it, advancing, delaying transactions which have occurred during the reporting period. Okay, so CA So let's quickly recall all the 4 answers what we did. The first answer was definition of fraud and the characteristics. Fraud is intentional mistake. It happens due to 2 reasons: FFR and MAHA, misappropriation of assets. FFR happens because of 3 reasons: manipulation, falsification, misrepresentation, intentional omission, and intentional misapplication of accounting principles. Then manipulation may inflating, suppressing purchase, sales, income, expenses. Then inflating or deflating the valuation of inventory, charging items of capital to revenue or vice versa. Misappropriation of assets happen due to 2 reasons: misappropriation of goods, defalcation of cash. Misappropriation of goods is Faltu answer. Do defalcation of goods or cash. Defalcation
So,
of cash happens because of inflating cash payments, suppressing cash receipts, and casting wrong totals. In exam, they can separately ask you cash payment ka answer, they can ask you cash receipts ka answer. Then, management override controls. Well, management is misusing the controls. The code is Sierra. Complex transactions, concealing it, altering the records, recording fictitious journal entries, adjusting the assumptions, and omitting, advancing, or dealing the recognition. Understood this much?
yeah, just one.
Yeah.
For characteristics of fraud, what exactly do you want me to write? Just for fraudulent financial reporting and misappropriation
And
of assets?
misappropriation of assets. Yeah.
Like it's going to be a two-line answer.
No, no. Characteristic of fraud, you will first write the definition,
Hmm.
then characteristic of fraud happens due to FFR and MOA. In FFR, just write the headings. FFR can be achieved by manipulation, falsification. Number two, intentional misapplication of accounting principles. Then intentional and omitting the event. In a misappropriation of assets, it can happen due to misappropriation of goods and defalcation of cash.
Okay, cool.
Just write the heading. Don't explain those points. Just write the heading.
Okay.
Okay. Now, explain fraud risk factor. Okay. Now, fraud risk factor can happen due to IO. It can happen due to IO. What are IO? Attitudes rationalization, incentives pressure, O opportunities. IO. Attitudes rationalizations, incentive pressure, and opportunities. This is what we have said. Okay, refer the book. Refer the book. One second. Now see, this can be useful for your correct, incorrect, plus for your MCQ. Out of this, the one they will ask you to identify, please identify whether it is incentive wala reason, whether it is attitude wala reason, whether it's an opportunity. Now see, what are attitudes and rationalizations? Like for example, Vijay Mallya, Nirav Modi. What do you think? Will they do fraud again?
Yeah,
Why? How can you say yes?
because they're fraudulent people.
Because
Like you know their habits, you know their attitudes. Like you've seen them do it before.
you have seen them, they have been doing it fraud, and there's an
Yeah.
obvious reason they will do fraud in future also. Okay, now Ratan Tata, will he do fraud?
No.
No. Person of ethics, ethical person, right? So attitudes rationalization means that the ethical standards, the ethical values, we know that they are non-compliant with laws. They are involved in fraud, and they will be involved in fraud in future also. Okay. So there are four reasons for attitudes and rationalization. So the known history for violation of SEBI, like securities laws or any other law, company law, income tax law, GST law. Okay, then excessive interest by management in maintaining increase the entity's inventory price or earning trend. Like every 4 months they are increasing the price because they are more interested in profit. And management is saying, please increase the price every 1 month, every 2 months. They want to increase the MRP of the product. Why? If the MRP is increased, the profit would be more, and then they will manipulate the profit. Okay. Disregard for the internal control over misappropriation of asset. Now you have framed a system for using the goods, like for dispatching. But because you are the senior management, you are the director, you are the CEO, you are not following the ICS. I gave an example. Like whenever the goods will be removed from the warehouse, it requires Mr. A, B, C approval. But I am saying don't follow it. I am saying I am your boss. That is my attitude. Behavior indicating displeasure, dissatisfaction. Now you are irritated by my behavior. You are a warehouse keeper. Obviously, you will try to do fraud, right? So that's a person's attitude, rationalization, that you will not be honest. Senior management will not be honest. That's attitude rationalization. Okay? I. I is incentive. I am telling you, boss, let's do fraud. Pass a bogus entry. When you pass a bogus entry, whatever profit we make, whatever taxes we save, I will give you 10%. Will you do fraud then?
Yeah.
Because you are getting some incentive. Okay? Acha. We were making loss, but our competitors are making profit. If I don't show profit, we will not get funding, right? There's a pressure. So high degree of competition on the market, saturation accompanied by the decline margins. So you can just write high degree of competition. High vulnerability due to rapid changes such as changes in technology, product becoming outdated or high interest rate. You will try to do fraud. Now, personal financial obligation. You are supposed to leave a company in next 2 months. Okay, you will be leaving the company in 2 months. You are the main person who is handling the stock. Okay, will you try to remove some goods without authorization?
Yeah, you might.
You might, right? Because anyways, you will not be catch. You will not be caught. Because once you leave the company, who will be bothered? You will be working in some other company. So known or anticipated future employee layoff. Now, recent anticipated changes to employee compensation or benefit plans. They were supposed to give insurance to you. I mean, the company was supposed to take insurance for you and your family, but they have not taken. You will be irritated, you will be angry, you will try to do fraud there. Promotion, compensation, or other rewards inconsistent with the expectations. There was a promotion to you, but the company has not promoted you. You will be angry, you will try to do fraud. That's incentive or pressure. Oh, opportunity. COVID. There was no person who can control the COVID transaction, right? And if you are a warehouse keeper, you will try to do a fraud because there was an opportunity. Yeah, related party transactions are there. So see, you say that doing transaction with RPs is not a harm. It's not a wrongdoing. But if you're doing fraud there, if you're not showing an ALP, you remember ALP?
Arms length price.
Arms length price. It has to be done at ALP, but if you're not showing it at ALP, it is a fraud. Then a strong financial presence or ability to dominate a certain industry sector. Like for example, Microsoft was trying to do way back. Now Apple has come, other OS are also there. Now when Microsoft was there, they were manipulating. I mean, they were into a monopolistic market. So whatever price they set for the software, you have to buy because there was no other operating system, right? So again, it's an opportunity. Large amount of cash on hand or process. You have large amount of cash. Obviously, you'll be doing fraud. Inventories that are small in size of high value or high demand. Jewelry, small size, like for example, a diamond or a ring. You're working in a jewelry store. You can keep in your pocket, you can keep in your shoe, anywhere you can hide it, right? So the size is very small, but the value is high. Remdesivir injection, it was in high demand. Injection was only this much, only one finger. So there was an opportunity. People started doing fraud there. Okay. So out of this, they can ask you to identify which will fall in attitude, which will fall in incentive, which will fall in opportunity. Okay. People who do
So
not
this
have
is only
they can keep.
for right?
Sorry.
This is only for correct, incorrect, and MCQs.
Correct, incorrect, and MCQ. But in case if it comes in the exam, you should know what to write. Like attitudes makes the behavior. Incentive makes like monetary benefit. Opportunity makes like any situation which gave reason to do fraud. Okay. Then sixth question. Mention the circumstances indicating the possibility of fraud. Like what are the possible reasons because of which a fraud can happen? The code is ODCP. ODCP. This was also asked, I think, in May 22. In May 22 it was asked. Okay. Now what is ODCP? O said is others. D said is discrepancy in accounting records. C is conflicting or missing evidences. P is problematic, unusual relationship between the auditor and the management. Headings are important. Others, discrepancy in accounting record like recording wrong amount. Conflict or missing evidences like bill is not there only. Problematic, unusual relationship between auditor and the management. Like management always think auditor has come, he will try to remove their mistakes. So management will stop you. Don't go here. Don't go. Don't do this. Don't check SAP. Don't visit factory. Like there's a harsh relationship between the auditor and the management. So here they have given the reason. Others. Unwillingness by the management to permit the auditor to meet privately with TCWG. You want to meet the CEO, but the directors are not allowing. Why? Because director no auditor has found out some fraud. He will report to the senior management. Accounting policies data at variance with the industry. Someone your competitors are following some other policy, but you are following some other policy. That means you're trying to do some fraud. Then D, discrepancy. Discrepancy means like recording it wrong amount or not recording it only. Transactions which are not recorded or improperly recorded. Unsupported or unauthorized balances or transaction. Balances means balance sheet items. Transaction means P&L items. C, concealment. The management is hiding some bill. I am asking you have bought a asset. Show me the bill. They're not showing the bill only. Missing documents or documents which have been altered. Problematic relationship. Denial of access to records, facilities, customers, or unusual delaying by the entity in providing the requested information. Auditor is asking, sir, give me bank statement, bank statement. They're not giving only bank statement. They are asking me, sir, show me TDS ka record. They're not showing TDS ka records only. The code is ODCP. Others, discrepancy, concealment, problematic relationship. Understood? So this is your
Yeah.
sixth question. Seventh, what are the responsibility of auditor if he is not willing to continue the engagement? Because if you have found out fraud, what is the worst thing you like to do?
You'll have to report it
You have to report it. Whom you will report?
to the board of directors,
Board of directors. But if the amount is up to minimum 1 CR there,
then CGA.
then CG. Form number
ADT3. No, sorry,
83,
yeah, 4.
83, 4. 4 frauds, correct. Thank God you remember this much.
Mhm.
Now let's say. But you report it. You have to prepare audit report also. But management is not allowing you to report. What will you do? You will say, okay, sir, bye bye, chacha. Let's break up. Let's call it off. You will withdraw. Repeated answer it was asked in the previous video. So people who do not have this answer, they can click the photo. This is the answer. Repetitive answer, important answer. Sir, if the auditor find out fraud and he wants to resign means withdrawal, he should first determine whether there's any professional or legal responsibilities applicable in the circumstances, including whether there's a requirement for the auditor to report to the person who made his appointment. When you resign, whom you have to inform?
The members.
Members plus someone else also.
Management.
When you resign, what is the form number?
ADT 3.
83. 83 has to be filed with
CG.
you file the form with whom?
With the central government.
ROC. Like central government is correct, but you file with
Yeah.
ROC. So you have to intimate your resignation to ROC also. In case of government company, whom you will inform?
CAJ.
CAG. In case of listed company,
SEBI.
SEBI. So when you're resigning, auditor determine whether there is any professional or legal responsibility to inform to the parties who have made his appointment. Acha, consider whether it is appropriate to withdraw from the engagement, but withdrawal is possible. Like in listed company, you can't withdraw immediately. There are certain requirements which you need to comply. But in normal companies, you can withdraw immediately. So consider whether you want to withdraw it or not. Now, if auditor withdraws, discuss with the appropriate level of management and DCWG that you are withdrawing and reason for the withdrawal. And same point, check whether there is any professional or legal responsibilities to intimate to the person who have made his appointment to regulatory authorities the reason for the withdrawal and that you are withdrawing. So the first and the last point is same copy paste again. Understood this much? So this was asked in the previous page. Last answer. What are the responsibilities of auditors for prevention and detection of frauds and errors? So we call this as DNP of FNE, detection and prevention of frauds and errors. You tell me primarily who is responsible for DNP of FNE?
Auditor.
Primary.
Oh, management.
Primary is management. Secondary is
Auditor.
auditor. Achha. If there is some fraud, I was doing audit, I perform my work with due diligence, professional skepticism, skill, care, but I was unable to detect that fraud. Will I be responsible?
No.
No. But if I am not performing with due diligence, professional skill and care, then I am responsible. Okay, so very easy answer, very 5-6 points. As per SA 240, management is primarily responsible for DNP of FNE. The auditor should obtain reasonable assurance that the FS are free from material misstatement whether due to fraud or error. We are more interested in fraud. Achha. In audit, there is always an audit risk that some frauds may go undetected due to inherent limitation. If you have got rank 1, 99 marks in audit, can you detect all the frauds?
No.
some altogether would be left out because of inherent limitations. Okay. You tell me, risk arising from error or risk arising from fraud, which one is more higher?
Sorry, what?
Risk arising from error or risk arising from fraud, which one is higher?
Risk arising from fraud.
Fraud. Achha, risk by a fraud done by the employee or risk done by the management, which one is higher?
Management.
By management. Okay. Risk of not detecting MMS. MMS means material misstatement resulting from fraud is higher than that of error. Auditor should perform his duties with due skill and care. The liability of auditor will arise. Liability of auditor for failure to detect fraud exists only when the failure is due to not exercising reasonable skill and care. If he is not doing properly his work, he will be liable. But if the auditor proves that he has performed his duty with due skill and care, he will not be liable. And if it does not prove, he would be liable. 7 points. Easy answer. Now there are 4 questions from the ISM. ISM means ICI study material. These 4 questions, do it thoroughly from the morning. Entire chapter is revised. Understood? 7 questions. ICI will be asking you all the questions from these 7 questions. Remember the keywords, remember the code. Like management override controls, the code will be Sierra. Okay, FFR there are 3 things. Misapplication, intentional omission. Okay, the 3 things are there. Okay, MOA there are 2 things. Misappropriation of goods and defalcation of cash. So codes you need to remember. Let me just ask you one simple question from the paper. Can you answer G? Correct, incorrect?
Incorrect.
Why?
It's a secondary responsibility.
Primary responsibility of the management to detect fraud and error in the FS. 2 marks, easy answer. Okay. You notice a misstatement resulting from fraud or suspected fraud during the audit and concluded that it is not possible to continue the engagement. As a start order, how would you deal with the situation? What answer you will write?
What are the responsibilities of auditor if he's not going to?
Or at the time of withdrawing, determine the professional or legal responsibilities. Consider inform to the management that we will be withdrawing along with the reasons if you have withdrawn. The same question number 7, I think, the second last question. 6 or 7, the second last question. So if it is not possible to continue the engagement, that means you are withdrawing it, right?
So ADT.
5 mark they had asked in the paper. Understood?
Yeah.
Any doubt right now?
No.
So we stop here. We continue in the next class. Fraud is done.
So we are starting with today audit of different entities. It's a 4 marks, 6 marks weighted chapter. One second. So in this there are 5 parts. Okay, it's a lengthier chapter. In the model it will be 85 pages approx. Audit of different types of entities. Now here first we will talk about school, college, theatre, cinema hall, restaurant, club, hotel, hospital, NGO. Okay, so there are 9 different entities. Now ICI will not ask you all 9 entities. ICI will ask you only one entity. Okay, and it can come for 3 mark or a 4 mark answer. So here rather than studying 9 different answers, it's better we study one common answer. The common answer is Galis. The code is Galis. Okay. Now when we talk about G is what? General points. Now for example, if we talk about school, college, hospital and NGO, it is basically run by a trust, a charitable institution. Okay. So it's basically profit, non-profit. What entity it is, profit or non-profit?
Non-profit.
It's non-profit entity. However, with college, with theatre, cinema hall, restaurant, club, hotel, all these are profit-oriented entities. So here we will not write about a company, or we will not talk about partnership firm. Here we will talk about it's a entity, okay, entity. So now the G is general point. So the first point in general, you will write the order as you see the constitution of the entity. That is, if it is run by a partnership firm, the auditor should check partnership deed. Now, for example, theatre or cinema hall, restaurant or a club or a hotel can be run by a partnership firm. Okay, so if it is run by a company, the auditor will check the AWA and MAHA. AWA and MAHA. One second. AWA and MAHA. Pencil is not. What's the full form for MAHA?
Memorandum of Association.
And AWA?
Articles of
Association. Achha, don't write MAHA in the exam, you will have to write full form. It's only for the understanding we write MAHA. One second. Achha, if it is run by a trust, what will you check? If it is run by a trust, what will you check? If it is run by a partnership firm, we are checking partnership deed. If it is run by a company, we are checking MAHA. If it is run by a trust, what will you check?
Trust deed.
Trust deed. You check trust deed basically. Okay. I'll take 5 minutes, I think. It's getting charged right now. So if the previous attempt, this chapter was asked 3 plus 3 plus 6 plus 2, 8 marks. It was asked for 8 marks. So it's a big chapter.
So Galis is common for all the different entities, right?
All the different entities. Yes, it's common for all the different entities.
And for safety, we in our answer we use the word entity, not company.
Entity, because like rather than having a confusion, like school is also run by a company in today's time, like Dhirubhai International. Okay, but majority we say it is run by a trust only.
So just say entity because entity covers everything.
Yeah, entity covers everything. When we talk about company, we specify our company audit. Here it is a mixed bag. So on the safer side, for say our safety, we write entity. Everywhere we will be writing entity. So Galis is G is general, A is assets, L is liability, I is income and expenses, and S is special points. Okay, Galis. G general, A assets, L liabilities, I income and expenses, S special points. So in like these are the headings. So you have to explain those headings because of descriptive answer 3 mark, 4 mark, 5 mark. So you have to explain each headings. The best part is when you do assets and liabilities and income and expenses, you will do one more chapter. The chapter name is Audit of Items of Assets. That also will be done at the same time only because there also the code is there.
Also, if they ask something, let's say for a school, so first I talk about general, then I talk about assets. Under assets, I need to do full hamara verify.
Yeah, verify. Not full, you can write 3-4 points depending upon the number of marks. Like with a 3 mark or 4 mark, I write 3 points. 2 points in general, 3 points in assets, 3 points in liabilities, 3 points in income expenses, and S, 1 or 2 points. So it will form like 1 page answer. But right now the trend of ICI is they are not asking you the full answer. They are asking you only income and expenses of a school. Okay. Cool. Assets and liabilities of a theatre. That's it. So not assets and liabilities, only assets they are asking. So income, expenses, and assets. 3 things has to be focused.
So if they ask assets, then do I need to give examples or I just talk about
write 2-3 examples, like the auditor should check the valuation of the assets like furniture, fixtures, computers, lab apparatus. Okay, like 2-3 things. If it's a restaurant, the auditor should check the valuation of the inventories, the bar stock, the food stock, etc. Hospital, he should check the stock of medicines, syringes, etc. Okay, see, furniture, fixtures, land, building is common. It is definitely common. Okay, so the auditor has to see the constitution of the entity. That is, if it is run by a partnership firm, he will check the partnership deed. If it is run by a company, he will check the MAHA and AWA. If it is run by a trust, he will check the trust deed. Okay, he will evaluate the internal control system. Now every entity has internal control system. Then he will obtain certificates from the management. Now what are those certificates? Confirmation certificate, loan confirmation certificate, turnover certificate, etc. So that's your first point. G is general. Okay. Now assets, you will write verify. So this is a common answer which covers your next chapter also, Audit of Items of Assets. So we will say check the valuation is as per the relevant AS. Now if you remember the AS, write the AS number now, or else you can write the relevant AS. Check the valuation of furniture, fixtures, computers done as per relevant AS. Okay. Achha. Now for example, if you are writing about stock, check the valuation of stock of medicine or stock of food in a restaurant is done as per AS2. check the furniture, fixtures, land, building, premises, etc. is in existence by conducting physical verification. So V is valuation, E is existence. R, check the asset is the right of the entity by checking documentary evidence. Like documentary evidence could be bills, invoice, agreements. So you just write right of the entity. I, check is there any charge on the asset. If you have taken a loan, check whether it is disclosed. Also it should be registered with ROC. F, check schedule 3 relevant requirements are followed. And Y set is yo, check for fraud. So the code is verify. Okay. Valuation, existence, right. Is there any charge? Schedule 3 followed, and yo, fraud. Okay. Now in the liability also, it's same only. So you will write valuation, same as like it is done as per relevant years. E may. So asset you can check existence, right? But liability you can't go and check physical verification. So what do you take? You take confirmation from third parties. Confirmation from third party, like creditor. Okay. Then R, asset is your right. What is your liability?
Obligation.
Obligation. The auditor should see whether it's an obligation of the entity. F, schedule 3 followed, yo, check for fraud. So it's same as asset. Now when you talk about income and expenses, the code is vouch. The auditor should check the vouchers like in school there will be no bills or invoices, right? It will be fee receipt for income. Okay, for expenses you can have bills, invoice, but you will see the auditor should check the vouchers of fee receipts, okay, bus fees, admin fees, etc. And you should check the payment vouchers, etc. Check whether the transaction has occurred over the current period of time. U, check it is approved under competent authority. C, check proper distinction is made between capital revenue, expenses or receipts. H, check it has been recorded in books of accounts. So for income and expenses you will write the code as vouch. Okay. Now special points. Now what are the special points? So special point, there are 3 points. Number 1, check whether there is any earmarked investments for earmarked funds, like tournament fund on the liability side also, tournament fund on the asset side also. Okay. So check whether there is any earmarked investments for earmarked funds. Now check whether there is a corpus capital fund, if any. Like for example in company we say profit is transferred to reserves. Share capital reserve will become shareholders funds, right? Equity shareholders funds. But in NPO we don't have a share capital, we have corpus. So whatever is the profit, here we say surplus. If there is a loss, we say deficit. The surplus or the deficit should be adjusted to the capital fund. Okay. Check any income from the special events and its corresponding expenses. Now special event, like for example school. So school may will give premises on rent. So check the income from special events like renting of premises, income from FD and its corresponding expenses. In a restaurant, in a hotel, you give premises for birthday parties, anniversaries, right? So check income from special events like birthday parties, ceremonies, seminars, anniversaries and its corresponding expenses. So 2 points in every point, right? Only asset and income expenses, that is the important part. Or the other option is you go and study the module, 85 pages, 9 different answers, it consists approximately 25-30 pages. So ideal way is to do the common answer. Anyways on 4, teacher will not give you 4, even if you write module answer, teacher will give you 2 and 3 only. Na? So for 2 and 3 you can get from this. Okay. Now, so that's the first part of the answer. There are 5 main parts. The one was 9 different entities. The second part talks about the government thing. Government. Now here when we talk about PSU audit, so there's a government company, there is government corporation, there is government department, government company, government corporation, government department. Now when you talk about company means a minimum 51%, MCQ, minimum 51% is held by CG, SG or both. Example, BHEL, GAIL, Bharat Heavy Electricals Limited, Gas Authority India Limited, BSNL, MTNL, VSNL. At what percentage do we become subsidiary?
In general or for government companies?
In general, subsidiary means in general, no?
50% or more?
No, it's more than 50.
More than 50. Okay.
More than 50. Here it is 51%. Like government, you become government company in 51%. For
not 50.5.
There it is no 50.01 also, no?
Like
it's more than 50. Okay, remember all these are small MCQs. So government corporation is also government corporation, but the stake is minimum 40 is held by CG, SG or both. Like for example, IRCTC, LIC. In case of government department, it is owned by the government, like police department, IT department, economic offence wing, ED, enforcement directorate, all those are government department. Okay. So whether you talk about company, whether you talk about corporation, whether you talk about department, all, may audit is done by the CAG. The auditor is appointed by the CAG. So either CAG will do or CAG will appoint someone else. Okay. Now, auditor of government company. The first auditor of a government company is appointed by CAG within 60 days. By CAG within 60 days. If CAG fails, who will appoint? Board within 30 days. If board fails, members will appoint 60 days at EGM. EGM is extraordinary general meeting. He will be the auditor till first AGM. So it is 60, 30, 60. 60, 30, 60 at EGM, and he will be the auditor till first AGM. In case of subsequent auditor, the CAG will appoint the auditor within 180 days from the commencement of financial year, and he will be the auditor till next AGM. In the exam, on a safer side, don't write CAG, write full form. If you do not know the full form, you can note it down. It's Comptroller and Auditor General of India. Comptroller. It is Comptroller. Comptroller and Auditor General of India. Write it. It is Comptroller and Auditor General of India. Cool. Now, okay, explain supplementary audit. So supplementary audit answer we'll be doing in a chapter called as auditors, in a separate chapter. I'll just give you a brief, in brief. See, supplementary audit means extra audit. It is basically means again audit. So it is done by CAG of a government entity. It is done by the CAG of a government company, only of a government company. So CAG has an option either to send the statutory auditor or some other CA to do the supplementary audit. So one time the audit is done, another time when the audit is done, it is called as supplementary audit. Here you will see one important word, 60 days. The CAG will pass the order for supplementary audit within 60 days. The CAG will pass the order for supplementary audit within 60 days. Okay. Now 60 days have to be counted from where? From the date of submission of original audit report. Now imagine if you are a member of a government company, you want to see supplementary audit report. Can you obtain supplementary audit report copy?
Sorry, what?
Can you obtain supplementary audit report copy?
No.
Yes, because you are a member, you can. Okay, for example, member dies. Legal representative wants to obtain supplementary audit report or copy. Can he obtain?
No.
Yes, he can. All these are MCQ. So if you are a member, you can obtain supplementary audit report or copy. You have to go to CAG. CAG will give the report. And so if the member dies, the legal rep has the right to obtain supplementary audit report copy. Okay. Now next answer is write short note on CAG. So CAG is appointed by the President of India. Okay. His salary, terms and conditions are fixed by the President of India. So CAG is appointed by POI. His salary, terms and conditions are fixed by the President of India. He is appointed for a period of 6 years, or 65 years of age, whichever is earlier. 6 years or 65 years of age, whichever is earlier. MCQ. Now who will remove him? When each house of the parliament, each house means that 2 houses, Lok Sabha, Rajya Sabha, decides to do so by a vote of minimum 2/3 members present and voting. 2/3, 66.67 or 75?
66.67.
Perfect. They can ask you otherwise in the MCQ also. 2/3 is 66.67. Okay. So they play. Now, there are certain important constitutional provisions which will help you for MCQ. Article 148 talks about appointment, removal, salary of CAG. Everything about CAG is written in 148. Now when he is appointed, he will do some work. The powers and duties are written in Article 149. Okay, then he will help in preparing the accounts on the advice of CAG, President to prescribe the accounts of the central and state government. Yeah.
Wait, sir, in the previous thing where you said minimum 2/3, majority means 2/3, or they're saying that majority and there should be at least 2/3 of the total members present?
They have given confusion here. See, they are defining the word majority here. Like generally we say majority means 51%. Like 100 ka majority is 51, no? But here they have defined majority, it is 66.67.
Oh.
By majority of minimum 2/3 present and voting. So they have defined majority means if you don't write majority also, you say 2/3 present and voting. That's the same answer.
Okay.
Okay. So you can write like this: by minimum 2/3 members of the house present and voting. Okay. Now, So 4 articles were there. Article 148 was appointment, removal, salary of CAG. Article 114 is powers and duties of CAG. Now, this came in the MCQ. On the advice of CAG, who will prescribe the accounts? President will prescribe the accounts. Article 150. Once accounts are prescribed, you will do the audit. The audit report ka format is given in Article 151. Audit report ka format is given in Article 151. Okay. So 148 is appointment, salary, removal of CAG. 114 powers and duties of CAG. 150 accounts ka format. 151 audit report ka format. MCQ. Okay. Now, next answer. So we studied audit of government company. Now we are talking about audit of government. Now when we talk about government in India, how many government are there? In India, how many government are there? We discussed this.
Two.
Better. Okay. Bharat Sarkar, Indian government, and the central government and the state government. Okay. How many state government are there?
How many states are there?
As many states are there. Okay. Now,
How many states are there?
27 to 29 total states, but the government are not 29 because few government like the East India, they have cumulative government. Okay, like Manipur, all those states are there, they have combined government. So when you talk about government, we're talking about audit of government. It is conducted by CAG. Three things have to be seen: audit of receipts, audit of expenditure, audit of stores and stock. Audit of receipts, audit of expenditure, audit of stores and stocks. Now, when you talk about receipt, like income for the government, so it's a 4 mark, 5 mark answer. So how would you write the answer? Rather than rectification, it's better you use logic. See, it says it is an important component of government audit. We are talking about government audit. It is an important component of government audit. Who does this audit? CAG. It is conducted by CAG. Okay, full form in the exam. Now, what is the duty of CAG? It shall be the duty of CAG to check whether the receipts are properly realized, assessed and credited to consolidated funds of India. Realized, assessed and credited to consolidated funds of India. Now, he should see whether the rules and procedure with regards to revenue are secured and effective and there's a proper allocation of revenue. So 3 mark, 4 mark ka answer, audit of receipts, this much. Important component of government audit conducted by CAG. The CAG should see whether receipts are properly realized, assessed, credited to consolidated funds of India. He should see whether the rules and regulations regarding revenue are secure and effective. That's it. Very important, expenditure audit. So expenditure audit mein there are 5 components: rules and orders, sanctions, provision of funds, propriety and performance. 5 are there: rules and orders, sanctions, provision of fund, propriety, performance. Out of these 5, the most important is propriety. Very important. Now when you talk about rules and orders, expenditure audit, so you will say it is important component, same point, government audit. It is conducted by CAG and auditor has to see the following. Now the first one is rules and orders. See, whenever the government is doing some expenses, there has to be some rule passed, some order passed. Okay, auditor, you go and check whether the expenses are incurred according to the rules or not. The auditor has to see whether the expenditures are incurred, confirms as per the relevant rules and provisions framed by the competent authority. So like for example, if in Bombay, metro was to be starting in 2014. So in 2014, government must have passed some order. It must have been written in the Constitution of India, or some government must have passed the order. Auditor go and check the order ka copy. Sanction. In Bombay, they have to build metro, the entire project of metro. So they would require a lot of approvals like Pollution Control Board ka approval, fire wale ka approval, local ministers ka approval, municipality ka approval. So auditor see that each item of expenses is approved by a competent authority. Third, provision of funds. Now for every expense, like for example 5,000 crore ka expense they were supposed to do. So immediately government will not spend 5,000. They must have been creating provisions from long. Auditor see those provisions. The auditor should see that the provision of fund for every expenses and the amount of such expenditure does not exceed the appropriation made. So it has to be according to the provision. So 3 we have done: rules and orders, sanctions, provision of fund. Now in the exam they can ask you 2 marks also. Please explain rules and orders and sanctions. So how do you write this answer? Sir, audit of sanctions is an important component of expenditure audit. Then you will write expenditure audit is an important component of government audit. It is conducted by
CAG.
CAG. Then fourth point, you write this explanation. Don't directly write the explanation. First you give the story there. It is important component of expenditure audit. Expenditure audit is important component of government audit. It is connected by CAG, and then you write sanction wala. Okay. Now come to propriety. Very, very, very important. Now see, propriety may be say like public ka money. Treat your public money as if it is your own money. Treat public money as if it is your own money. Now, in this, auditor aims to bring out the cases of improper, avoidable or infructuous expenditure. Infructuous means like unnecessary expenses. Like for example, the ministers are traveling. Okay. So sir, ministers are traveling by air. So why are you traveling by air? You can go by train also. Sir, why are you going by train? You can go by bus also. Why are you going by bus, sir? You can go by walking also. Sir, why are you going walking also? You can. Why are you going only, sir? So the CAG will ask question because see, if as an auditor, you are bound to just check the documentary evidence. So if traveling expenses, you will check the receipt, you will check the ticket, you will check the bank statement. It is matching. But sir, whether those expenses were necessary or not, that is very important. Like in a private company, like your business, okay? So the directors are spending money on traveling. So auditor will check the ticket, he will check the bank statement. That's it. If it is matching, it's a good expense. But he can't question them, like, sir, why are you going by air? You can go by train or you can go by bus. But in propriety audit, the money is not of the minister, it is of the public. So you have to treat public money as if it is your own money. Okay. So it says the auditor will try to bring out the cases of improper, avoidable, infructuous expenditure, even though such expenditure has been incurred as per the rules and regulations. So even though the expenses are matching, payments are matching, but still whether the expense was necessary or not, that is very important component of propriety. So here we learn 4 principles. He should see that expenditure conforms the principles of propriety. There are 4 principles. These are the 4 principles. They can ask you separately this question. What are the principles of propriety audit? First principle. The government official should treat public money as if it is their own money. Should treat public money as if it is their own money. They should not abuse the authority. Abuse the authority means misuse the power. Third, apart from agreed remuneration, no other avenue is kept open for them to earn money. Like apart from remuneration, no other avenue is kept open for earning money. The money should not be used on a particular section of the society. I can't spend money as per caste religion, like I'm spending on Maharashtrians, not on Gujaratis. It is not allowed. So till here, it's a 4-mark answer, 3-mark answer. What are the principles of propriety? Okay. But the last point, the money should not be used on a section of a society. They have separately asked in the exam. So generally we say you can't go with caste, creed, religion, you can't spend. But you can spend depending upon these 4 exceptions. First, the amount of expenditure involved is insignificant. Like for example, I am spending money on a community of a Rajasthan, small community. Okay, like the lower part of the Rajasthan, I am spending like assuming 1 lakh rupee. So out of so many crores of expenses in India, government is just spending 1 lakh rupee on one small community. It is allowed. Number 2. Now what is insignificant will depend upon case to case basis. Okay. A claim for the amount could be enforced in court of law. Now for example, government has encroached the land of Adivasis. Okay. You know what is encroachment?
He's taken possession of it.
Taken possession. The government has taken possession. Okay. So they will be giving some money to them, right? Because when you're giving your land, obviously you will require compensation. So someone will say, sir, you're not giving to public, you're giving only to the Adivasi people, because they can fight in the court, because it's a claim which can be enforced in court of law, because it's a legal thing. So you're not giving to normal public, but you're giving only to Adivasi. So it is allowed. Third, the expenses is as per the recognized policy and custom. Recognized policy and custom. Now, for example, in South, to preserve the Kathak, Bharatnatyam, or in Rajasthan from some folk dance, government is giving some kind of a, you can say, subsidy or some kind of a pension to those people. So government is not giving to others, but they're giving only to preserve those, like Bharatnatyam is there, Kathak is there, to preserve the heritage of India. So it is as per the policy and custom. Like from past 30 years they have been giving it. So this year also they are giving. It is allowed, sir. Fourth, if you are a government officer and you have spent some money on behalf of the government, you will claim reimbursement. You know what is reimbursement? Like 2,000 rupees you have spent, you will come to the office and we will pay you 2,000. So 2,000 you have spent, we are paying you 2,000. Is it a profit to you?
No.
No. So someone will say, sir, why are you giving him 2000? Arey boss, it's a reimbursement. It's a reimbursement. So the amount of allowances given to meet expenses are not on the whole sources of profit to the recipients. So these four exceptions they can ask you separately. Cool? Now.
So could you once go over audit against provision of funds?
Yeah.
In general, can you talk about this point again?
Yeah. See, provision of funds. Like for example, 5,000 crores you have to spend. So 5,000 crore government will not spend today directly. They must have created provisions. Like every year, 100 crores, 100 crores, or 500 crores, 500 crores. Okay. So now, for example, this year government wants to spend 5,000. So you'll see how much is the provision created for that expenses. So we have spent around, we have created a provision of 2,000 crores. So this year you spend 2,000. Next year we will spend more 2,000. Next year we will spend 1,000. So the expenses have to be according to the provisions created. Okay. Now, performance. So government is performing a lot of places like midday meal programs, infrastructure, metro projects. Okay. So the auditor will see whether the performance of the government is giving are efficient, economy and effective. 3E: economy, efficiency, effective. Okay. So in performance audit, the auditors will cover the efficiency, economy and effectiveness of the government schemes, programs and projects. What are the 3E? See, efficiency audit means what? Like you're attending the batch. Okay, when you're attending the batch, this is efficiency, whether I will be able to retain by that batch or not. That is called as efficiency audit. Economy looks into the monetary terms. Like I'm paying so much money, whether I'm getting the benefit or not. Effectiveness. So after attending the batch, whether I'll clear or not. That is called as effectiveness. 3E: economy, efficiency, effectiveness. Okay. Can you read all the 3 points?
So could you read the efficiency point once?
It looks in the various scheme projects are conducted economically and yielding benefits expected of them. Like for example, if I have spent 1,000 rupees, okay, so the auditor will come, the 1,000 rupees ka benefit, like you have spent 1,000 rupees on, let us assume, for some midday meal programs. So whether the midday meal ka benefit is given to everyone or not. So that is called as efficiency audit.
Okay.
Okay. Economy, basically whether the resources you have acquired in the best efficient manner, in an economical manner. Like for example, I'm getting a low quotation somewhere, but I'm buying from high quote people only. Like was giving me more expenses. Why? Because some percentage will go to some officer. That's the reason. So the auditor, you go and check. Best quality, low price. Effectiveness. Now whatever you had planned, like 1,000 crores, maximum people would be benefited. So whether that has happened or not, that's called effective audit. It is the appraisal of the performance of the scheme, projects and programs, like the COVID vaccination drive. Okay, at the time of COVID, that was the auditor will see whether it was effective or not. Okay. Now, the third point is audit of stores and stock. So stores and stocks is basically your asset. Like government have a lot of stores and stocks of food grains, medicines, arms and ammunition. So how do you frame the answer? It says it is an important component of government audit. It is conducted by CAG. Same answer. Following points should be verified. The code is what? Vary. What is vary? V. Valuation. The auditor should check the valuation of stock is proper. The auditor should see the valuation of stock is proper. E. He should see whether the existence of the asset is owned by the government. R. Check whether the asset is the right of the government. I. Check is there any charge against any stock or any asset. That's it. Finished. You will not write F wala point. Why you will not write F wala point?
Because governments don't follow Schedule 3.
Correct. It's only for the company. That's the reason. Okay, so we write vary. So rather than starting new answers, better you use whatever you have done. It was asked in, I think, November attempt, the previous November 21 attempt, audit of stores and stock. Okay. Now, duties of CAG. So duties of CAG we have done short note on CAG. Now it is duties of CAG. So again, rather than studying new, they can ask you descriptive answer also. You will To compile and submit the accounts of CG and SG. Government audit is done by whom? CAG. Government company audit is done by CAG. Government corporation audit is done by CAG. Government department audit is done by CAG. To conduct audit of government companies, government corporation, government department. These three things we just studied right now. To conduct audit of receipts, to conduct audit of expenditure, to conduct audit of stores and stocks. So we are just using things what we have studied. Okay, to conduct audit of grants and loans of the government. Cool. So this is what we have studied till now. Okay. Now government audit reports. There are two kinds of government: central government report, state government audit report. Now central government audit report is finalized in the parliament. State government audit report is finalized in legislative assembly, Vidhan Sabha, Vidhan Parishad, parliament में Lok Sabha, Rajya Sabha. It is submitted to President of India. It is submitted to respective governor. MCQ. Okay. Finalized in Parliament, finalized in Legislative Assembly, submitted to President of India, submitted to respective governor. So this was your third part. The first part was school college wala answer. Second part was the government company ka answer. Third answer was your government ka answer. Fourth part is your partnership and LLP. Okay. Now, in partnership from an LLP, if they ask you anything, how would you do the audit? The best part is answer is common. Answer is common. See, the only thing difference is about the liability, LL and the act name. Can you remember? Can you tell me the partnership act ka year?
18 something.
Oh, 18.
Indian Partnership Act 1992.
Yeah, my birthday, 1992. It is 1932.
1932.
And LLP Act
2008.
2008. Okay, that's the only change. Rest everything same. So the auditor should verify partnership deed. In partnership deed, who should verify PSR? PSR means profit sharing ratio. He should check the capital and interest and its interest. He should check the loan and its interest. Then he should check the partners and the types like active partner, sleeping partner, dormant partner, partners in profit only, drawing in uska interest. Then what else you will check? BUA. What else? Assets, liabilities, income, expenses. Remuneration to the partners as per Income Tax Act 1961. So in partners ka remuneration is given as per Income Tax Act. He would see the duration of partnership, partnership at will or particular partnership. He will see the pending legal cases. He will see goodwill valuation. He will see the provision of admission, death, retirement, dissolution. Oh, very important point. Provision of Indian Partnership Act 1932 and or if the question is on LLP Act 2008. Okay, you will see the partnership form whether it is registered or not. This point will come only if the question is on Partnership Act. Okay, partnership form, not on LLP.
So, and if it's for LLP, will the first point change for partnership deed?
No.
Oh, LLP is also.
It is formed on the basis of partnership deed only.
Oh, okay.
LLP partnership deed, it's limited liability partnership. There is always a PSR, there's always a talk about capital, interest, drawings, loan, everything is there.
Cool.
Now, the next part is local body. Local body we do it in after some time. So first we finish entire LLP answer. Okay. So entire LLP answer is written on page 78. Okay. But I think you have written on point number 10. It's in continuation only for you, right?
No, it's 17.
Okay. Numbers you have written 17, right?
With
important points of LLP.
Yeah, important points is 17.
That's point number. Na, okay. It's okay. Now see.
Wait, so directly after this first I should look at point 17.
Yeah, because that's connected for LLP, na? Cool. Now, so when we talk about LLP, so minimum 2 partners are required to form LLP, and minimum 2 partners would be called as DP. DP is designated partners. Okay, they should obtain DPIN. DPIN is what? Designated partner identification number. Then this was asked in the exam. This point: what books to be maintained by LLP? Details of income, expenses, details of assets, liabilities, details of cost records, and any other particulars as the partners may decide. 4 things, 3 mark answer. Details
But
of
in the 3 mark answer you just write 4 lines.
Yes, 4 lines. That's the only answer. Following book should be maintained by LLP. You have to give quality, not quantity.
Alright.
Okay. Details of income, expenses, details of assets, liability, details of cost records, and any of the particulars as the partners may decide. Then, correct, incorrect. Audit. See, company audit we say it is mandatory, but LLP audit is not mandatory. LLP audit becomes mandatory only if the turnover is more than 40 lakhs in the previous year or contribution is more than 25 lakhs. Turnover more than 40 lakhs, contribution more than 25 lakhs. Turnover more than 40 lakhs, contribution more than 25 lakhs. MCQ, correct, incorrect. Okay. Now, few forms are there. Every LLP is required to file 2 forms. One is Form 11. Form 11 talks about the annual return to be submitted within 60 days. Within 60 days from the close of the financial year. 60 days is basically 2 months. Form 8, it is basically statement of accounts and solvency. It is to be submitted within 30 days from the end of the 6 months from financial year to which such statement of account and solvency relates. Okay. So this is 60 days from the end of financial year, and form number 8 is 30 days from the end of 6 months from the financial year to which such statement of accounts relate. Now see, April to March is the year. It says 6 months. 6 months is September. From there you will take 30 days. Ideally by 30th October, you have to submit form number 8. Okay. Form 8 is statement of accounts and solvency. Annual return is in form number 11. Then, appointment of auditor shall be done by DP. DP means designated partners. If DP fails, then only the partners can appoint. There's a question in the model also. Partners cannot appoint directly the auditors. Auditors are always appointed by the DP. If DP fails, then partners will appoint. Okay.
Okay.
Now, can you tell me the first auditor of a normal company? Who appoints first auditor?
Board of directors.
Board. And subsequent auditor?
Board of directors. Members.
Okay. And if I say auditor, only the word auditor. Who appoints the auditor of a company?
What?
Who appoints the auditor of a company?
Didn't you just ask me that?
Yeah, but I want to ask you again. Who appoints the auditor of a company?
Member.
So if they say auditor or if they say subsequent auditor, both means the same. If they're talking about first auditor, they will write first auditor. If they're nothing they have written, you always assume it's a subsequent auditor.
Oh, cool.
Okay. Now, the first auditor is of a LLP is appointed during the first financial year, but before the end of the first financial year. Like during the year they will appoint, but before 31st March. However, subsequent auditor will be appointed 30 days prior to the end of financial year. That is basically 28th Feb. Like by 28th Feb, the subsequent auditor of LLP will be appointed. Okay. So this talks about LLP. Now, last part of the chapter is left. That is basically your page number is 73, local body. Local body. Okay. Point number I think probably 10 or 11 it would be.
Wait, so for first auditor, the board of directors first appoints them, right?
In case of a company.
In case of a company.
Yeah.
And if the board of director fails, then the members is 90 days.
Yeah.
Okay. So then why did you say members appoint the auditor?
Subsequent auditor, no?
Yeah, subsequent auditor. Okay. Sorry, nothing.
You're getting confused. Don't do auditor right now. We'll be doing it separate class.
Yeah, cool.
Okay. Let's concentrate here only.
Yeah.
Write a short note on audit program of local body. Write short note on audit program of local body. Can you give me example of local body? You know it.
This BMC.
Finally you remember BMC. Okay. So like Ahmedabad has Ahmedabad Municipal Corporation. Surat has Surat Municipal Corporation. We have Brihan Mumbai Municipal Corporation. Okay. Now Chennai has I think Chennai Municipal Corporation. So write a short note on audit program of local body. So always remember for local body, the Maibab, the godfather, the grandfather is always state government. Okay. The local audit wing of the state government shall be in charge of the audit of municipal accounts. So the auditor will first check the authenticity of his appointment. Who has appointed him? It is always state government will appoint him. Then point number 2 is very important because the next question also. The auditor while auditing local bodies should report on 5 points. This you need to mark it up. Okay. What are the objectives of local body? He has to prepare a report on these 5 points. Report on the fairness of the content and presentation of the FS. Simple word may we say true and fair view. Number 2, reporting on the strength and weakness of the system of financial control. Number 3, report on the adherence to legal and or administrative requirement. 4th, report whether the value is being fully received on money spent. 5th, detection and prevention of frauds, errors and misuse of resources. 5 points very important. Report on fairness and contents and presentation of affairs. Report on strength and weakness of the system of financial control. Report on adherence to legal and administrative requirements. Report whether value is being fully received on money spent. Detection, prevention of frauds, errors, misuse of resources. Very important. Okay. Then the answer me, the first point was state government will appoint. He will check the letter of appointment. Number 2, he will report on following. Number 3, 4, 5, 6. 3, 4, 5, 6. It is same as expenditure audit. Okay, if you remember expenditure audit components, can you just tell me the components of the expenditure audit?
Records,
rules and orders. We just did sanctions,
provisions, propriety,
and performance. So propriety will not come here. So exactly whatever the content was there for sanctions, the auditor should check the sanctions, that every expenditure should be backed by a sanction letter. You will write here. Okay, you will talk about provision of funds, you will talk about rules and orders, you will talk about performance, but you will not talk about propriety. Okay, so again it's a mixed bag of whatever answer we have studied. Then the next question is important objectives of local body audit. Important objective of local body audit. Okay, now important objective of local body audit, this answer. This is the objective of local body. Same answer. Reporting on fairness and contents and presentation of affairs, strength and weakness of system of financial control, reporting on adherence to legal and administrative requirements, reporting on whether the value is being fully received on money spent, detection, prevention of frauds, errors, misuse of resources. Okay. So from this answer you are making the next question. So if they ask you about write short note on audit program of local body, 1, 2, then 3, 4, 5, 6, from there 6 points ka answer it is. Okay. If they ask you important objectives of local body, 5 points, the point number 2 of the previous answer. Okay. Now if they ask you salient features of the financial administration of local bodies. Yeah, doubt?
Yeah, if for the first thing that you said, if they ask us to write a short note on local bodies, then under the second point I need to mention all of the 5 points.
5, yes. Okay. Now, salient features of financial administration of local bodies. Local bodies ka financial administration. Okay. So the code is BAE. Budgetary procedures. A is accounting system. E is expenditure control. Budgetary procedures, accounting system, expenditure control. Now budgetary. Now you tell me for local body, who will give the budget?
The state government.
The state government. So according to the budget, you have spent the money or not. The object of the local body's budgetary procedure, financial accountability, expenditure control, funds are raised properly, money spent by the proper department as per the rules and regulation. That's budgetary procedures. A, accounting system. A is your accounting system. Whether municipal accounts also follows accrual basis, because previously they were following cash. Right now they have shifted to accrual. Okay. E, expenditure. So in municipality, person who makes the rules are called as legislative department, and perform who spends the money is called as executive department. Okay. So in municipal accounts, there are demarcation. Demarcation means a separation of powers between the legislation and the executive. Legislation means the powers are vested to make laws, to make rules, whereas the powers are delegated to the officers. Full stop. Can you just check your answer? Till here only you have to write. The rest you can cut. Whereas the executive powers are delegated to the officers. Full stop.
And from all the matters onwards, it's
cut. Don't write that.
Cool.
Okay. 4th. Types of grants received by local bodies. Okay. So local body ka who will give the money again? State government. One is general purpose grant. This is like for general purpose. For example, you have to wash the roads, okay, you have to clean the roads, Swachh Bharat Abhiyan, like very general, okay. These grants are given to bridge the gap between the needs and the resources. Specific. COVID ke liye they have given some donation. Okay. So these grants are given in certain sources for performance of certain like specific task. Okay. Statutory and compensatory grants. Like for example, in Mumbai we had LBT before GST, local body tax. Now when GST came, everything has gone to the central and state government. To compensate that, they will give some, they will get some money. These are granted as compensation for a local body on account of loss of revenue on taking over a tax by the state government from local body. So because LBT, OCTRA, all those are over now, so they will give some grant. That grant, they will get some grant. That grant is called as Statutory and Compensatory Grant. GSS. General, Specific, Statutory. Okay?
Okay.
Now, there was one more question asked in the previous attempt. Okay, I'll just show you that from the module. They had asked the meaning of municipality. So just note it down somewhere. Municipality means a unit of local self-government in urban area. Write it somewhere, anywhere you can write it.
Okay.
People are watching when recorded also, you can write it anywhere on the terrace, in your book. Municipality can be defined as a unit of local self-government in an urban area.
I've already written this.
You have written it, right? I think you
Yeah.
must have done it. So people who have not written, please write. Municipality means unit of local self-government in an urban area. Then what was the next point you have written?
5 types
Five.
of urban local authorities.
5 types of different authorities, yeah. It's on module page number 13.19. Please mark it. This is municipality ka definition. 5 types of authorities are municipal corporation, municipal councils, notified area committees, town area committees and cantonment committees. So they can ask your 2-mark answer. Okay, 5 types of committees. Then expenses. The next point would be expenses, right? Expenses would be classified as this they had asked in the exam, in the previous attempt. General administration, revenue collection, public health, public safety, public works. So public health, public safety, public work goes together. Education and my favorite others such as interest payment. So it's a question on municipality. Now the next answer it talks about your leases and hire purchase. Okay, so long back they asked a question on leases and hire purchase. Okay, so they can ask you either of it. What is the audit procedure for hire purchase? What is the audit procedure for lease transaction? Hire purchase, that means you're buying something on installments. Lease transaction, that you have taken something on rent, longer period. Okay, so both may, what is the point common? The auditor should first check the agreement. So I've written the key points here. You frame it in your own words. The auditor should check the hire purchase agreement. Okay, here the auditor should check the lease agreement. Here the auditor should check the invoice of the asset purchase. Here there will be no invoice. In lease transaction there is no invoice. Okay, here the auditor should check the number of installments paid. The auditor should check the lease rent paid. Acha, in hire purchase we make one payment, like one lump sum payment. That is called DP, down payment. The auditor should verify the down payment. The auditor should check the advance or deposit. In lease, in lease we give like 5 lakh, 10 lakh as a deposit. He should verify that. Rest every point is common. He should verify the repayment schedule. He should check physical verification of the asset. He should check the insurance of the product, insurance of the asset. He should verify the bank statement for payment. He should check the taxes, depreciation. 9 points are there. You can write 5, 6 of your choice. And instead of check, it's better that you write hi-fi English words. What are hi-fi English words?
I don't know.
Vouch, verify, examine, ensure, comply, scrutinize, ascertain, evaluate, study, determine, see.
Wait, give few words.
Vouch, verify, examine, ensure.
Yeah.
Vouch, verify, examine, ensure, comply, scrutinize.
But these have slightly different meanings also, right?
Yeah, but in the model they have given. I will write what model says. Then 2-mark answer, MCQ, correct, incorrect. Financial lease, operating lease. Okay. So when you take a lease for the maximum part of the asset, of the life of the asset. For example, I have taken a JCB on rent from L&T. The JCB ka life is 10 years. For 8 years, the JCB will be with me only. It's a financial lease. Okay, I have taken a car for maybe 15 days on rent. That's operating lease. Okay, so now the distinguish is in lease, in financial lease, the lessee uses the asset for maximum part of the life of the asset, there for a smaller part. Achha, point number 2, it's kind of your correct, incorrect, it is there in the model. See, in leases, in financials, it's look like a loan agreement only. Like rather you go and buy, it's someone else is buying and giving it to you. But for the maximum part of the life, the asset is with you only, no? So it looks like a loan agreement that you bought the asset on loan. Here, it's a kind of a rental agreement. Risk of obsolescence is with the lessee because the product gets outdated. It's of the lessee. Here it is of the lessor. The person who gives the asset on lease is called as what?
What?
The person who gives the asset on lease is called as who?
Lessor.
Lessor. And to whom the asset is given is called as the lessee.
Lessee.
Okay. Risk and reward gets transferred to the lessee here because for the maximum part the asset is with you only. So any repairs, maintenance, it will be of yours. Here it do not get transferred. It is with the lessor only. In financial lease, you have an option to buy lower than the market rate. In financial lease, in operating there is no such provision. So 1, 2, 3, 4, 5, 6 points are there. Distinguish in financial lease and operating lease.
Yeah.
Done? Chapter is over. Finish. So one more chapter is done. We continue in the next class. So the next chapter what we're starting is that is basically audit of cooperative society. So audit of cooperative society is not a separate chapter. It is a part of chapter number 13 in the module audit of different entities only. But in my book we have made a separate chapter. Okay. So it's basically 2 mark, 4 mark weightage unit. Probably more important in MCQ. Okay. Now say the first question. The first question is a big question. They will ask you any item out of those so many items. I think A to L the items are there. They can ask you any 1 or 2 for 2 marks or 3 marks. How as an auditor you will check the following for a cooperative society. First, for loan. Sir, the auditor should see that the no loan should be given to any person other than member. No loan should be given to any person other than member. Now society ka example is Amul. Banking, I mean we have cooperative banks like Saraswat Bank is a cooperative society. Housing society is there. So no loan should be given to any person other than the member. Okay. The auditor should see that special permission should be obtained to grant loan to another society. Like if one society is giving loan to another society, he should see special permission is obtained. Now who will give special permission? The member. Accepting. So the first 2 points was loan giving. The third point is accepting. Accepting loans or deposits for members or others shall be subject to bylaws of the society. Bylaws means rules and regulations of the society. Okay. Now, so these are the 3 points for loan. Number 2, investment. Investment can be made only in Kasau. Investment can be made in only in Kasau. A society can make investment only in Kasau. 2 mark answer. Central State Cooperative Bank. A is approved security. S is share securities bond etc. of any society having limited liability. A, any other cooperative bank. O, other money permitted by CGSG. C is Central State Cooperative Bank. A, approved security. S, share securities bonds of society having limited liability. A, any other cooperative society approved by registrar. O, other money permitted by CG or SG. Kasau. So for A point and B point important. Then C, distribution of profit. Like in company when we distribute dividend like profit, we don't have to compulsory transfer to reserve. Now it has been removed. It is voluntary. But in society we say minimum 25% of the profit. Minimum 25% of the profit should be transferred to reserve fund before distribution to members. Before distribution to members. Minimum 25% should be transferred to reserve fund before distribution to members.
So companies this is not there, right?
Companies it is not there. It is only for society. Okay, minimum 25 MCQ. The registrar. Now when we say registrar here, it means registrar of society. The registrar may reduce it, but still 10% is required. The money in the reserve fund can be used for business of society, investment purpose or for public purpose. Business, investment, public purpose. Okay.
So if the MCQ comes for this, will minimum be 25% or 10%?
Minimum is 25%. Okay. Now, debtors. Overdue debts. So how do you present debtors here? Sir, 6 months to 5 years and more than 5 years. 6 months to 5 years and more than 5 years will have to be classified and reported. The auditors to see whether provision for debts are made and the same is satisfactory. Provision for bad debts is made or not. Percentage of overdue debts to working capital and loan advance have to be compared with the last year to see whether the trend is increasing or decreasing. So that debtors upon working capital and loan advance should be compared with last year to see whether the trend is increasing or decreasing. The auditor should see proper actions for recovery are taken, position regarding court cases. So this is a 2-mark answer for debtors. The category here is 6 months to 5 years and more than 5 years. Number 2, provision for bad debt is satisfactory. Third, percentage of percentage of overdue debts to working capital loan advance should be compared with last year to see trend is increasing or decreasing, and proper action for recovery is taken or not. Okay. Now, overdue interest, like it is basically outstanding amount which is not received yet. So if you have included in the calculation of profit, you will exclude it. So overdue interest is excluded from the interest outstanding while calculating the profit. Okay. Now what is this overdue interest? It is the interest accrued in accounts of which the amount is overdue. It's not yet received. So it has been accrued but not yet received. Okay. Very simple. Bad debts. Bad debts can be written off only if it is certified as bad, either by the auditor or by the managing committee. So bad debts can be written off against bad debts reserve or bad debts fund only if it is certified as bad either by the auditor or the managing committee. It is certification of bad debts. Okay. Someone has to say bad. Who will say that it's bad? Either the auditor or the managing committee. Okay. Now, assets and liabilities. So very simple point. Assets and liabilities is the old point for what we did right now. Auditor has to see valuation, V, E, existence, R, right, ownership. Remember, verify? Valuation, existence, ownership. Then fixed assets should be valued at cost less PFD. That's your normal accounting procedure. Current assets like inventory should be valued at cost or NRV, whichever is less. All the liabilities should be brought into account. All the known liabilities should be brought into account. So for assets and liabilities, these are the 4 points. Okay. Then adherence to cooperative principles. What does adherence mean?
Following the corporate principles.
Following the corporate principles, like the complying it. Okay. Check how far the sales could be affected at low price, like how much low you can sell. Because see, here they get benefit of economies of scale. Now what is economies of scale? When you buy in bulk, right? So if I have bought it for like maybe 25 rupees, the MRP is 100, so 25 ka 28 I can sell 30 also, I can sell 40 also, but I can't sell at 90, 95 because 25 to 90 I will make huge profit. Why I am making this profit? Because of the members. So it's wrong. Society, you are following the principles of cooperation, cooperative. You can make profit, but not large profit, not huge profit. Okay. Check how far the sales could be affected at low price. Number 2. While auditing the expenses, check whether these are economically incurred and there is no wastage of fund. Okay. And principle of propriety audit should be followed. What is propriety principle?
That they should
treat public money
as their own money.
So whoever is managing the society, treat public money as if it is your own money. So you will spend carefully. Then provisions and rules. The auditor should point out the non-compliances of Societies Act rules and bylaws. Again, they are writing the same thing only. He should point out the various irregularities, departures, improprieties from the provisions of Act, rules and bylaws. If the state law contains restriction on payment of dividend, like society may, like every state has a different act, like Maharashtra Society Act is there, Rajasthan Society Act is there. So they allow dividend, but there's a restriction on payment of dividend or percentage of dividend. There's some condition to be complied. The auditor should see those conditions are complied or not. He should check other provisions like restrictions of borrowing, that's loans, investment of funds, etc. also complied with. So this is regarding provisions and rules. Then members register in their passbooks. The society will be giving loan to the members. Now there are 5,000 members. You will not go and check every entry. You will select the data on test basis. Test basis is called as sample basis. So your society ka bank statement you will verify, and members ka you will verify the passbook. Okay, and you will check the repayment schedule also. The auditor should verify members' passbook regarding the loans given and its repayment. He should obtain confirmation from loans and advances. Then this checking would be done on sample basis, which is a matter of professional judgment. Now what is sample? Auditor will decide as per his own heart. K answer is important. Special report to registrar. Now when we are talking about your registrar, it doesn't mean registrar of companies, it means registrar of society. Okay. Now when we say special report, okay, when things are going good, then we make special report, or when things are not going good?
When things are not going good.
When things are not going good, you prepare special report. So auditor will prepare special report and give it to the registrar. Sir, when you see there's a personal profiteering by the members of managing committee in the transaction society, like they are doing purchase sales, but society ka jo managing committee is there, they are making personal profit. That is not a cooperative principle. If he finds out, he will report it to the registrar. Number 2, detection of fraud regarding expenses, property, purchase of society. Detection of fraud regarding expenses, purchase of society and properties. Mismanagement like decision against cooperative principles. Mismanagement like decision against cooperative principles. 4th, in case of urban cooperative bank, what will happen? Disproportionate advances to vested interest group. Like I am giving loan to my family members only. We have our own society, banking society, we are giving only to our family members. We are not giving to others. That's a wrong thing. Cases of reckless advancing. Now we have to check credit score. We have not checked your credit score and we have given loan to you. It is called as reckless advancing. So these 5 points are important for society. When will the auditor give special report? He will give the report in 5 cases. Understood this much? Now, the next one is audit class. Audit class means a category. So there are 4 categories currently in India, A, B, C, D. So depending upon the turnover, the loan, the net profit, the auditor gives a class. Okay. So we have given B category to your society. Ideally it should fall in A, but I as an auditor have given you B. So you will not be happy. If you are not happy, you will go to the registrar. So registrar will say to me, hey auditor, do one thing. The society has come to me. They are saying they fall in category A, but you have given B. Do one thing, check it again and check the exact category what they fall into. So it says the auditor will provide a class to the society. If the society is unsatisfied, it may appeal to the registrar and he may direct to review the audit classification to the auditor. So the auditor will provide a class to society. If the society is unsatisfied, it may appeal to the registrar and he may direct to review the audit classification to the auditor. Okay, that's audit class. Then, what are the contents of report of the society? This is very simple point of Companies Act only. Very rare they will ask in the exam. All necessary information explanations obtained. Proper books of accounts is maintained. Accounts are giving true and fair view, right? It's complete. P&L is giving true and fair view of books of accounts. P&L is giving true and fair view. Balance is giving true and fair view. Okay, very simple answer. What are the contents of a report of society? Then, point number 3. In your notes, please mark that as important. Contents of schedule of the report. Masti. Now, so after the report, you will prepare schedule. When will you prepare schedule? When 5 things are there. See, special report ka again there are 5 points. This masti is for the schedules. You have to give extra details. Now, what is masti? M. Any material or property belonging to society appearing as bad or doubtful for recovery. Bad or doubtful for recovery. Like I know Atulya will not pay the money to me. Okay. So society has booked them as a debtor. But auditor sees that Atulya have not paid the money. 1 year have passed, 2 years have passed, 2.5 years have passed. So what he will do? He will prepare a schedule behind his report and give it to the registrar. Any other matter specified by registrar. S. Sums not brought into account, like unrecorded transactions. T. Transaction which is contrary to the Act, rules and bylaws. Transaction which is contrary to the Act, rules and bylaws. I. Material irregularity in expenses or realization of money. Like sometimes you're spending 1,000 rupees, sometimes you're spending 1 lakh rupees. In a day you're spending so much amount. Auditor will report it to the registrar. The code is masti. M. Material or property belonging to society appearing as bad or doubtful for recovery. A. Any other matter specified by registrar. S. Sums not brought into account. T. Transaction which is contrary to the Act, rules and bylaws. I. Material irregularity in expenses or realization of money. Okay. Then the auditor has to answer 2 sets of questionnaire called audit memos. So audit memos is an MCQ. 2 sets of questionnaire. One is general. So general is applicable to all. And practical, it is specific. Like for banking ka format would be there. Housing ka format would be there. Okay. Can you tell me where we have studied this answer? Which books are to be maintained?
Financial statements.
One section is books of accounts. There we have done. LLP also we did now.
Hmm.
Details of income and expenses, details of purchase and sales, details of assets and liabilities, and cost records. For MS cost, cost records. What is MS cost? Multi-state cooperative society. That is cost records. So whoever ka books of accounts, they're asking whether they're talking about company, whether they're talking about society, whether they're talking about LLP in the exam. Always write these 4 points. Details of income and expenses, details of purchase and sales, details of assets and liabilities, and cost records. Cool. Now, qualification of the auditor. Who is an auditor here? Sir, a CA plus COP. That's CA under CA Act 1949. This qualification similar to your Companies Act. Body corporate is disqualified. Okay. Then, officer or employee of MS cost. Third, partner, employee of office or employee of MS cost. D, indebted guarantor for more than rupees 1,000. 1,000 rupees 1,000 only. In Companies Act, what is the limit for indebtedness? Companies Act mein?
5 CR. 5 lakh.
5 lakh, huh? Guarantor?
1 lakh.
1 lakh. So you will not say 5 lakh, 1 lakh. You will say more than 5 lakh, more than 1 lakh. Because exact 5 lakh mein you are qualified, na? More than 5 lakh mein you are disqualified, more than 1 lakh mein you are disqualified.
So and here, qualification is CA plus COP or just CA?
CA plus COP.
Okay.
So when we say chartered accountant, CA kind of important that there they have written to do audit you have to take COP. So it always assume CA plus COP.
Okay.
Okay. Now, appointment of auditors. So the first auditor is appointed by the board within 1 month of registration. He will hold the office till the first AGM. If the board fails, members in GM will appoint. Okay. Subsequent auditor, who will appoint? Members will appoint, and he will be the auditor till conclusion of next AGM. Now, when we talk about Companies Act, Companies Act, my auditor is till which year?
6th year.
So it's first AGM to 6th AGM. So for how many years is appointed?
5.
5 years. Okay. AGM may we say first to 6th AGM, appointed for 5 years. Here we say AGM to AGM. Okay. Now there are 3 more answers. Powers and duties of auditors. This you have to read it from our book. We'll do it later on. Then one more answer is a special audit. This they have asked in the exam. One more answer is an inquiry and inspection. This we do it from the book. Okay. First we do the other questions. Question number 10. Charitable purpose. Now listen. What is the percentage to be transferred to reserve fund?
25%.
Minimum 25. 2 words. Minimum 25. Registrar can reduce it, but still how much is required?
Minimum 10%.
Minimum 10 is required. Now when you talk about donation for charitable purpose, the registered society with the approval of registrar may contribute maximum 10%. Maximum 10% of the net profit remaining after compulsory transfer to reserve fund. Like 100 rupees you have fund, you transfer 25 to reserve fund, 75 ka 10% you can transfer. That's max. So max 10%. There it was minimum 25%. Here it is max 25%. Okay. Now, restriction on shareholding. In case of a society having limited liability, in that society an individual member like person like us, you, me, others, okay, can hold how much? Maximum 20% in terms of number of shares, and the value of such holding can be maximum rupees 1,000. Maximum 20% number of shares and maximum 1,000 rupees ka value you can hold. Now when you talk about this 1,000 rupees, it is face value or nominal value?
Face value.
Face value and nominal value means the same. Face value or market value?
Face value.
Face value. Okay, we talk about face value always. Okay. So maximum 20% in terms of numbers and maximum unka value should be 1,000 rupees face value. Okay. The above provision does not apply to a registered society. Now what does this line mean? Like if individual is holding share in a society, he can hold maximum 1,000 rupees ka share. But this rule is not applicable to a society. Like if a society is holding share in another society, this rule is not applicable. When I say this rule is not applicable, what does that, how do you interpret that point?
A registered society may hold more than 20%
or more than rupees 1,000 ka share.
Wait, is not applicable to registered society means that individual can hold this more than this much in a registered society.
No. This provision, see, is if in a society having limited liability, if an individual wants to hold, he can hold this much. Okay. This rule, the above rule is not applicable to a registered society. That means if a society is investing in another society, then this rule is not applicable. That means they can hold shares more than 1,000 rupees, more than 20%. Cool. Now, Acha, auditor has to see the breach of this provision, right? What is written out there? State acts may have different amounts. Auditor has to verify both the limits. In case of conflict, central act will prevail. Like if there is a conflict between state and central, which act will prevail? Central act will prevail. Cool. So 3 questions from the book. What is the page number?
72.
72. This is the answer. Powers and duties. Powers and 3 questions, okay? What are your powers? Sir, right to access books at all times, vouchers, require information, explanation from the employee's officer. It's your right, you can obtain it. Duties. This is the answer, we'll be doing it similar in Companies Act, Auditor chapter, LT dies if you remember. The auditor has to make certain inquiries. You remember this? LT dies? Full Gajni effect.
I remember LT dies, I have no idea what.
L is loans and advances, T is transaction, D is deposits, I is investments, E is expenses, S is shares.
So over here, D
and I will not there, it is only LETS. Let's. Okay. Loans and advances are not prejudicial to the interest of society and members. Transactions of the society are not prejudicial to the interest. Whether personal expenses have not been charged to P&L, and in case it is stated in books of societies, any shares have been allotted, whether cash is received or it is just a bogus entry. So here we will say LETS, let's. Loans, expenses, transactions, shares. People who do not have this, they can click the photo, take screenshot. Then, special audit. Important answer in the model, only this question is given. Special audit. Now see, when we do, you remember supplementary audit?
Yeah.
Who does supplementary audit?
Either the statutory auditor himself or another auditor appointed by the CAG.
By CAG. Like CAG orders it, right? So here, in society, we say CG will pass the order, CG. So the CG or the SG, either alone or both, hold minimum 51% that society. The CG may direct either a CA or MS cost auditor. MS cost means multi-state corporate society auditor to conduct a special audit and report it to CG. Now, what are the cases for special audit? Sir, if CG is of the opinion that the affairs are not managed as per the self-help, corporate principle or sound business principle, you are not working properly. Okay, you are misusing the powers. So, special audit will be conducted. Or the society is managed in a manner which is causing injury or damage to the interest or business to which it pertains, like you're hampering other ka business. Or the financial position of the society is to endanger its solvency. Endanger its solvency means you're on the verge of becoming insolvent. So the auditor will have the same powers as that in section 73, what we did right now. And on the receipt of report or special audit, the CG may take action as it considers necessary. So 3 grounds are there. You need to remember this down. This is a question from the model, so they can ask probably.
Okay.
Then, how is inquiry and inspection done by central registrar? Okay. So this is, people can click the photo also. I'll write here inquiry and inspection. Okay. So central registrar may order for inquiry inspection on a complaint by 4 people can complain. First, on a request from federal cooperative to which it is affiliated, like housing may there will be housing ka one registrar, banking may there will be one banking ka registrar, agriculture may there will be one agriculture ka registrar. On top of that, there will be central registrar. Okay, so each registrar will complain to central registrar. A creditor means one
creditor to the
one creditor, yeah, single creditor. 1/3 member of the board, that means 33.33%. 1/5 member of the society, that is basically 20%. So it is how many people can complain. The first category is federal cooperative, number 2 is a creditor, number 3 is 1/3 member of the board, number 4 is 1/5 member of the society. May either he will go or he may send someone, right? Central registrar will go or central registrar may send someone. Take it to inquire into the constitution, working and financial condition of the society. However, before inquiry, 15 days notice would be given to the society. Okay, we are coming for the inquiry. The 15 days gap has to be there. Now, if the central registrar goes or he has sent someone else, okay, you go and do the inspection, what will he do? He will have access to books, accounts, cash, properties, and he may summon any person. Summon means to call. He may require to call a general meeting also. General meeting, he will give days. How many days? 7 days. If the officers fail or refuses, he may call it himself. Now, he may summon any person to appear before him and examine him on oath. Once everything is completed, central registrar within 3 months of the report will communicate the report to society, because their investigation was going on. To the financial institution, they must have taken some loan, and the person to have at whose instance it is needed, whoever has complained, right? So they will give the report in 3 months. So 3 days are here, 15 days is for the gap of inspection, 7 days for calling the general meeting, 3 months to communicate the report. Cool. So it's a 2 mark small chapter. It can probably ask an MCQ or correct, incorrect. Descriptive may one answer is this one. Special audit ka, special report, schedules, and out of A to L, they can ask you loan, they can ask you investment wala point, dividend wala point, debtor wala point. Okay, A, B, C, D, special audit, special report, and schedule wala answer. These are important. The rest, everything is for the MCQ. Cool. One
So
more.
what was important?
Important may in the first question A, B, C, D.
Okay, only A, B, C, D.
A, B, C, D.
And K also, right?
What was K? Can you give the heading?
Special report.
Yeah, special report K. Okay. Then they can ask you schedules. Question number 3. Question number 4, you know it, but still you can mark which are to be verified. Then question number 8, special audit one answer, like we did right now. Special audit for MS costs.
And whatever is not marked as important, I can ignore it, or
Read it once. I mean, on a safer side, you should read everything and go.
oh, cool.
Cool. Chalo, one more chapter is done. Bye bye, guys. Take care. So yeah, hi. So we are starting with Caro revision. Caro is Companies Auditors Report Order 2020. Minimum 5 marks. It can go to 6 also. It can go to 8 also. Okay. 5 mark ka 4 mark ka descriptive you will find. 2 mark in correct, incorrect. 1 or 2 mark you can find it in MCQ also. Now, when you talk about Caro, so the most important point is Caro ka applicability, non-applicability. So Caro is applicable to all the companies. Caro is applicable to all the companies. Okay, always remember the year is 2020. On a safer side in the exam, don't write Caro, write full form. CA, Companies Auditors Report Order 2020, and Auditors Report will be in bracket. Okay, on a safer side. Now, Caro is applicable to all the companies, including foreign company. So Caro is a part of duties of auditor. It is a part of the audit report. He needs to prepare some points and give it to the members. How many points are there? There are 21 points in the Caro. 21 points. ICA can ask you any point. So Caro is applicable to all companies, including foreign company. What is foreign company? Foreign company means a company which is incorporated outside India, having a place of business in India, and doing any business activity in India. If a company is incorporated in London, they are doing business in London. It is not a company as per Companies Act only, because Companies Act will not be applicable to it. What is the foreign company? Incorporated outside India, having a place of business in India. Now, sir, Caro is not applicable to. Caro is not applicable to BIPs. B, it is banking. I, insurance. P, private limited. S, section 8, OPC and small. Banking, insurance, private limited, section 8, OPC and small. Okay, BIPs has to be seen on which date? It has to be seen on balance sheet date. BIPs has to be seen on balance sheet date. Always remember, BIPs has to be seen on the balance sheet date. Now, if you are a banking company, you are exempt. If you are an insurance company, you are exempt. If you are section 8, OPC and small, you are exempt. Okay, always remember the definition of small company is the biggest amendment for this attempt. Now, small company ka definition is what? So, small company is a type of a private company having paid up share capital of less than or equal to 4 crores, less than or equal to 4 crores, and turnover less than or equal to 40 crores. 4 crores and 40 crores. Four crores and 40 crores. 4 crores and 40 crores. And so if my capital is less than 4 crore and my turnover is less than 40 crore, I am a small company, and if I am a small company, I am exempt. Okay. Now, biggest amendment for the small company for your attempt. Okay. Now, when you talk about private company, so private company it's not automatically exempt. You have to check 3 conditions. We say POR. POR is my paid up share capital and reserve should be less than or equal to 1 crore, and my outstanding loan should be less than or equal to 1 crore, and my revenue should be less than or equal to 10 crore. Capital less than equal to 1 crore and loan less than equal to 1 crore and revenue less than equal to 10 crore. Now, when I say less than equal, that's max. So, if my capital is less than 1 crore and loan is less than 1 crore and my revenue is less than 10 crore, okay, capital you have to see last year ka 31st March, revenue you have to see last year ka 31st March, but loan you have to see last year ka at any point of time, okay. Always remember, loan has to be seen at any point of time. If any one condition is contravened, CARO would be applicable. Now, for example, if I say my loan is 80 lakhs, my revenue is 8 crores, my capital is 1.2 crores, loan less than, revenue less than, capital is 1.2. Can you tell me CARO applicable or not applicable?
CARO is applicable. Why? Because
condition is contravened. If any one condition is contravened, CARO is applicable. Good. Now, so these conditions are and. So for getting exemption, 3 conditions should be satisfied. Capital should be less than equal to 1 crore and loan should be less than equal to 1 crore and revenue should be less than equal to 10 crore. If all the 3 conditions are satisfied, then only CARO is not applicable. If any one condition is contravened, CARO is applicable. Okay. Now, as per section 242, what is a foreign company? Foreign company means a company which is incorporated outside India, having a place of business inside India, that is in India, and conducting any business activity in India. It is a foreign company. So, foreign company ka definition they will not ask you in audit paper. It is basically law ka definition. It's only for your reference. Now, when we say next point is CARO is not applicable at the time of consolidation. Like holding company is there, subsidiary is there. They will prepare their financial statement, which is called as consolidated financial statement. Then holding company audit report would be prepared, subsidiary audit report would be prepared. It is called as consolidated audit report. Now, will we have consolidated CARO also? This is standalone financial statement. This is standalone audit report of A Limited. Now, there is B Limited. A Limited ko CARO would be applicable, so this is CARO. B ka SFS is there, that's standalone FS, standalone audit report and CARO. Okay. Now, we know that every company has to prepare that CFS if there is a subsidiary. After CFS, we will have consolidated audit report. Now, the question is, will there be consolidated CARO? No, there will be no consolidated CARO. Now, most of the students get confused here. There is a clause number 21 which specifically talks about consolidation. So, when you read module, when you read the Baar CARO, they say that CARO is applicable to consolidation. See, when I say CARO is applicable to consolidation, that means if there is a holding company and if in the subsidiary associates others like CHAS, company holding associate subsidiary and subsidiary of such holding company, if there is an adverse remark in the CARO report of those subsidiary, those associate, holding company ka auditor will write in his CARO in clause number 21. Entire CARO is not applicable, only clause 21 is applicable. That too when there is a holding subsidiary and in subsidiary ka CARO there is some other comments like negative comment. We'll be doing that in a later stage. So don't get confused that CARO is applicable. I will say CARO is not applicable at the time of consolidation. That means we will not prepare the entire CARO. Holding company ka CARO mein you will see only in clause number 21 mein about subsidiary. When if there is any negative remark in the CARO reports. Okay. We will revise this again when we do clause 21. Now, CARO is applicable to deemed public company. What is the deemed public company? A private company which is a holding or a subsidiary of a public company. Now see, I'll take an example, it's clear. AB Limited. Sir, AB Limited is a public company. How do you identify it's limited? Caro is applicable. Now when I say Baby P Limited, Caro applicable, not applicable? If the question is only on Baby P Limited. Check POR, correct, check POR. So my capital is less than equal to 1 crore, outstanding loan is less than equal to 1 crore, my revenue is less than equal to 10 crore. Now Caro is applicable, not applicable? Now Caro is not applicable, perfect. Caro is not applicable, okay. Now but if AB Limited invest more than 50%, so this becomes holding company, this becomes subsidiary company. Now the question is, now in case of Baby P Limited, capital is less, loan is less, revenue is less. Is Caro applicable, not applicable? Now Caro is applicable. Why? Sir, because now it is called as deemed public company. It is called as deemed public company. Cool? Now, okay. 1 second.
What if the information isn't given for a private company? If holding company is a public company and subsidiary is a private company, information is not given. So you will say Caro is applicable because information is not given. Na? Whatever you are assuming, I will assume that Caro is applicable to it. So Caro is applicable. Achha, if POR is satisfied, if capital is less. Okay, data is not given for POR. Data is not given for POR. Holding company is a public company. Private companies, POR is not given. Okay. So it's not a deemed public. I mean, nothing if this is given, you will say it is Caro is applicable. Na? If no condition is given, like capital, loan, revenue is not given. See, understand, when you want exemption, they have to give the data. If data is not given, that means there is no exemption. It is applicable. Cool.
Capital consider both equity and preference. 1 second. Oops. 1 minute. iPad got hanged. Now see. Now the question is, if in the exam they ask you to calculate. So my first question is, sir, what you should be included in a paid up share capital. So paid up share capital, you will say it includes both equity also, preference also. Now in the exam, if they have given equity share capital 60 rupees, preference as 40 rupees, calls in arrears as 1 rupee. So for the purpose of Caro, you will take 99 because the word is paid up share capital. Paid up share capital. If in the exam calls in advance is given, ignore. Calls in advance is ignored. Now for reserves, what will you take? Everything. Everything means everything. All types of reserves including free reserves, capital reserve, securities premium, CRR, that's capital redemption reserve, revaluation reserve, etc. In case if they have given losses, minus it out. Debit balance in P&L, reduce it. Okay. So because the word is paid up share capital and reserves. It's not free reserve, it's reserves. So if in the exam any reserves they have given, you add it up. If losses is given, you reduce it. Debit balance in P&L is given, reduce it. Okay. Now, sir, for the purpose of loan, what will you consider? All kinds of loan. Short term, long term, secured, unsecured, working cap, OD, CC, every loan, every loan. Now, sometimes on FD also they give loan. 100 rupee ka FD was there, loan was of 80 rupees. For the purpose of Caro, you will take 180, 20, 100, 80. How much you will take?
180.
You can type. $80. 100 ka is FD, 80 ka is loan.
180 is the total, 20 is the balance amount. How much is the loan amount given in the question? 80 rupees, no? So 80 would be your loan. 80 would be your loan. Okay. Now, for revenue, you will consider all revenue. Now, when we say revenue, revenue means revenue from operations and other income. Now,
from operation is 100, other income is 20. For the purpose of Caro, how much you will take? 100, 20, 120. 120. Everything, capital, everything, reserves, everything, loan, everything, revenue, everything. So this was the first set of part of Caro. Okay. So Caro means that Caro is applicable to all companies, including foreign companies, not applicable to BIPs. Banking, insurance, private, section 8, OPC, small. For private, you will check POR, capital reserve less than equal to 1 crore and loan less than equal to 1 crore and revenue less than equal to 10 crore. If everything is satisfied, Caro is not applicable. If any one condition is contravened, Caro is applicable. Cool? Now, so there are 21 clauses in Caro. I say can ask you any clause, any point. Okay. So FIDA, F-I-D-A, FIDA, say PC has statutory income, and it defaulted. So this is the first stanza. FIDA 4, PC 5, 6, 7 statutory, 8 income, 9 defaulted. Then next stanza says public say we earned money. What we did? We did fraud. Then we gave it to Nidhi. Then we gave it to relative. After relative we distribute amongst ourselves, that's internally. Then we gave some saman like goods. Goods is called as non-cash transaction. How much is left out? Section 45I. How much is left out? 45I. That's on NBFC. So 10, 11, 12, 13, 14, 15, 16. So till 16 clauses here. Then next 5 clause. Cash losses, resignation, material uncertainty, CSR, qualified adverse remark in other group companies. Qualified adverse remark in other group companies, Caro clauses. Okay, this is new 5 clauses. Previously we had 16 clauses only, then 5 more came, there are 21 clauses. I say can ask you 2 mark, 3 mark, 4 mark answer, any clause. Okay, few are big like 1, 2, 3, 3 is big, then default is big, then no, NBFC is big. So 1, 2, 3, 4, 5. These 5 are big clauses. So ideally they should ask this only in the exam because there are so many points in this 5 important points. Okay. Let's do it one by one. Okay. Okay. So my first clause is F. F is what? Fixed assets. Fixed assets include both tangible also as well as intangible also. Tangible also, intangible also. Now, so there are 8 points in the first clause. But the problem is ICAI will not ask you all 8 points. They can ask you on 2-3 points. Okay. Now my first 3 points are linked. Sir, the auditors, like in the exam, they will ask you what are your duties as per Caro 2020 for fixed asset. So you will say the auditor should check the following for Caro 2020. Sorry, for fixed asset as per Caro 2020. First, record should display the details, quantity, situation. Record should display the display details, quantity, situation of both tangible as well as intangible asset. Now, the auditor should check whether physical verification is carried out at regular intervals. Whether any material discrepancy, it is how it is reported. If there is material discrepancy, it should be reported. So, reported where? Caro mein. So, these 3 points can be together linked and asked, okay, what are your basic duties as per Caro for fixed assets? First, the data should display details like what is the asset, quantity, how much is the number, situation, whether it's working, non-working, okay, of both tangible as well as intangible. Physical verification should be carried out at regular intervals. If there is any material discrepancy, it should be reported. Next, the title deeds of immovable property. Once again, title deeds of immovable property. When I say title deeds of immovable property, it means ownership papers, okay, agreement. Should display that the properties are held in the name of company except the properties where the company is lessee. See, if you have the company has taken on lease, the ownership would be of whom? Will it be of company or the other party? You can say
it will be of the other party. It will be of the other party, right? So that means that's logical, na? It will not be on the company's name. So auditors see, you have to go and check the title.
The property should display that the properties are held in the name of company. This was asked in May 22 MC. Correct, incorrect. The auditor should see that all the properties should be in the name of company. The answer is incorrect because when the properties are on lease, it can't be on the company's name. Okay. So this is linked. 4th and 5th is linked together. So if the property is not in the name of the company, the auditor should give the following details. What? Description, gross carrying value, whether it is held by the promoter or other relatives or employees, the period held, reason for not holding in the name of the company. Okay. So these 2 points are on the title deeds of immovable property. So I can ask you specifically these 2 points. Okay. So 3 then 2. The next point is on revaluation. Whether the revaluation has been done by the company of its PP by the registered valuer. PP is plant, property, equipment. So revaluation should be done by a registered value. That's logical. In case of a change in revaluation, specify the amount of change only if the change is of minimum 10%. Now see, first you have to see whether the revaluation is done by a registered value. Number 2, if the revaluation is done, okay, and if the change is minimum 10% upside downside, auditor, you have to report. If the change is only 5%, 6%, 7%, 8%, 9%, you will not report it. Okay, you will report in Caro only when the change is a minimum 10%. MCQ, correct, incorrect. You will report in Caro for revaluation of fixed asset only if the change is a minimum 10%. Okay, then so this is again one different point. So first is 3, then 2 together for title, this 2 together for revaluation. Then one different point, whether any proceeding is initiated or pending, against the company under Benami Transaction Prohibition Act. If yes, the auditor should see whether the company has disclosed the details in FS. Okay, so Benami is like when they have taken, they have given the money, but the property is held in the name of someone else. So if they have caught, now they will disclose in the financial statement. Now if they have disclosed in the financial statement, auditor you write in the Caro. So there are 8 points. So how do you remember? 3 is different, 2 is different, then 2 is different, then 1 is different. So I say can test you on either of the point. Okay, fixed assets. I, inventory. So it is linked, again same point. First 2 points are linked. Whether physical verification is carried out at regular interval, same as fixed asset. If there is any material discrepancy of 10% or more, that's minimum 10%, how it is dealt in books of accounts. Whether material discrepancy of minimum 10% is properly dealt in books of accounts. See, in fixed asset, there was a material discrepancy, but they have not given any amount. Even if 1 rupee ka material discrepancy is there, you have to report in Caro. Okay, but in inventory, material discrepancy ka percentage is 10%. In fixed asset, revaluation ka percentage is 10%, and it is minimum. See, all these pointers I am recalling again and again because it will help you in MCQs and correct incorrect. Minimum 10%, minimum 10%, minimum 10%. Material discrepancy there is any amount. Here it is for inventory is minimum 10%. Okay, I was saying if there is a material discrepancy of 10% in inventory, minimum 10%, you have to report in Caro. In fixed asset, there was also similar point, material discrepancy for fixed asset, but here it is any amount, any percentage. Even if 1 rupee ka material discrepancy is there, you have to report in Caro. For inventory, you have to see the discrepancy is how much? 10%, then only you will report in Caro. So this is the basic difference here. There is any percentage, here it is 10%. Third, so these 2 points are linked. Third and fourth is linked together. Sir, has the company taken working capital loan of more than 5 crores from bank or FI on security of current asset? Now current asset means stock and debtors. So you give stock and debtors, you will take working capital loan ODCC, okay, more than 5 crores. There is no wrong thing. Okay, check whether they have taken. Oh, they have taken. Check whether quarterly statements or annual statements filed by the company to bank or FI is in agreement with BUA. If not, give details. Like when you take loan, you remember in bank audit we have done, we calculate ODCC. Don't worry, when we revise bank audit, you will come to know. We have done a bank audit ka chapter. In that stock was there, minusing acceptances, LC, then we get a percentage, then we minus the margin. Okay, in debtors we minus ineligible debtors, then we minus the margin. Together, whatever is the figure, the bank give a sanction on that. On that sanction limit, they can take the debit, they can take the ODCC. So every quarter we have to file a statement like this is the stock, this is the debtor, this is the stock, this is the debtor. Basis that the bank will give me the drawing power, okay, DP, drawing power. So auditor, management must have taken the loan of working capital of more than 5 crores, okay. So they must have filed statements to the bank. Just see whether the statements are in agreement with BUA or not. So these 2 points are together linked. So they can ask an inventory, these 2 points together, okay. So F is fixed asset, I is inventory, big points. D, debts. Now we say debts given. When I say debts given, it's a liability or asset. Liability or asset. Liability or asset. Debts given. It's your asset. So check whether the company has given any LIGS. What is LIGS, sir? Loans, investments, guarantees, securities. Loans, investments, guarantees, security. To whom? To the company, to the firms, to the LLP or any other party. Whether the company has given LIGS, okay, there's no harm. They will given, it's an asset. Check whether any LIGS is given to companies, firms, LLP or to any person. Okay. If company has given LGS, loans, guarantees, securities during the year, check the total amount given and the balance outstanding on the balance sheet date. Like for example, 1 crore I had given, but on 31st March, no I. Okay, no I. Total amount during the year and the balance outstanding. Like for example, 1 crore we had given, but on 31st March it was only 80 lakhs outstanding. So you will write about 1 crore was given, 80 lakhs is outstanding. To whom? To the family people. Who's your family? Subsidiary, associate, joint venture. We say such. Subsidiary, associate, joint venture. In B, what will you disclose? Total amount at the year end and the balance outstanding to parties other than such. Other than such. Other than such means like any person other than such. So it's basically additional disclosures. Additional disclosure. Okay. This is A wala is for the such, B wala is for other than such. Check whether LIGS made is not prejudicial to the members of the company. Prejudicial means that it should not be against the members of the company. So first 3 points are together linked. Then 4 and 5. Check whether the repayment of principal or interest is regular. If you know the EMI ka component, EMI may there are two things, principal and interest. Check whether principal is repaid, interest is paid on time. Okay. If the amount is overdue for more than 90 days, 1 month EMI defaulted, 2 month EMI defaulted, 3rd month also EMI defaulted. If the amount is overdue for more than 90 days, check whether reasonable steps have been taken by the company for recovery. You don't have to go for recovery, you have to see whether management has taken a step for recovery or not. Okay. 5th. Now we have given loan to you. Okay. Now when we gave loan to you, you were supposed to pay back, but you did not pay it to us. So what will you say? Sir, give me some more time. So either we have given you more time or either we have given you some more loan. 1 lakh ka loan we had given to you. Now you are saying, sir, I will not be able to pay loan. So I need more 20,000 rupees. So I have given you additional loan of 20,000 rupees. So I have given additional loan. You have to see whether any additional loan is given or not. So whether any loans or advances is renewed during the year or any fresh loan is granted to settle the overdue loan to same parties. Specify the amount of such loans renewed or fresh loans. Then 7th, whether the company has granted loans and advances either on demand without specifying the terms of repayment, like short-term credits, you will specify the amount and the percentage of the total loan granted to the promoters, related parties under section 276. So we have given a loan to promoters or to related parties without specifying the terms of repayment, give the disclosure. So this is again a big clause. Okay. Now I am removing the mic. You tell me.
FID, Fida, FID, any doubt on any point? So fixed assets, F, I is inventory, D is debts. So out of 21, 1, 2, 3 is very important. Okay.
Now A is adequacy of 185 and 186. So what is 185, 186? 185 CA final section, 186 CA final section. You will say the auditor should check the provision of 185 or 186 is complied. If not, give details. Check the provision of 185, 186 is complied. If not, give details. This much only. Very rare you will see in the exam. Okay. P, public deposits. So when you have taken deposits from public, whether deposits accepted or which are deemed to be deposits, whether DPO is complied with. What is DPO? Directives of RBI, provisions of Companies Act, orders of NCLT or code. Directives of RBI, provision of Companies Act, orders of NCLT of code are complied with. DPO. Okay. C, cost records. Sir, whether cost record under section 148 is maintained or not, if not, give details. By any chance, do you remember the limit for cost records?
What is the limit? At what limit you have to maintain cost records? ₹35 crores. 35 crores, 35 crores.
Whether cost record 148 is maintained or not, if not, give details. 35 crores is right. Okay. So if minimum 35 crores is there, you need to maintain cost records. If you have not maintained, section 140 is contravened, and if section 140 is contravened, the auditor will record in cargo. Okay. Next, statutory dues. If it is undisputed, that means there is no fight between the government and the company. And if it is outstanding for more than 6 months, it should be reported. Outstanding for more than 6 months, it should be reported. Disputed, you have to report always the amount and authority. Disputed, always amount and authority. So it was FIDA say PC has statutory dues and unrecorded income. Now what is unrecorded income? Like previously you have hidden some income. This year the company, the income tax department have caught you. So you will be disclosing, the company will be disclosing. Auditor, go and check whether it is disclosed or not. Whether any unrecorded or undisclosed income is disclosed in the accounts during the year. ACTS means accounts. Okay, if they have disclosed, just write in CARO. Just write in CARO. Management will disclose in the FS, auditor you will record in CARO. Okay. Ninth important. Default in repayment of borrowings. 9 you find difficult. Okay. Listen, I have taken loan. The company has taken loan. Now you have to repay. When you are repaying, you have defaulted. Why? Because you have no money. So there are 6 points here, so you can number it out. First, whether company has default in repayment of bank, financial institution, government, debenture holders. So you have taken loan from bank, FI, government, debenture holders, you have defaulted. Auditor check. Okay, if they have defaulted in bank, FI, government, give details lender wise. Give details lender wise. If the company has defaulted in repayment of bank, FI, government, you will give details lender wise. Okay. Then number 2, it's a question, kind of a question. Is the company declared as willful defaulter? Is the company declared as willful defaulter? If it is yes, the company is declared as willful defaulter. No, the company is not declared as willful defaulter. Okay, this much only. Third and fourth point are term loans. Term loan means long-term loans used for the purpose for which they were obtained. Are term loans used for the purpose for which they were obtained? Like long-term loans I have taken for expansion, machinery, whether I am using it for proper purpose or not. Then, sir, are short-term money used for long-term purpose? Are short-term money used for long-term purpose? That means you have done something wrong. You can't use short-term money for long-term purpose. No? Then, has the company raised money from person or entity and used to pay the obligation of such? Like I have taken loan from someone else and I am paying loan of whom? Such. Auditor, report in the CARO. Has the company raised money by pledging securities held in subsidiary, associate, joint venture? In subsidiary, associate, joint venture, when the company has invested, it's an asset. They have taken money by pledging those investments. So auditor, report in CARO. So there are 6 different points. No linking is there. Cool. So my first 9 clauses are done, and 1, 2, 3 and 9 is important. You need to remember the clause numbers also. Reason being, they will ask you to identify an MCQ for sure. Okay. Don't write this whole numbers. You have to write Roman numbers. Okay. This is 9th. Okay. Section number where? One second, I'll remove the mic.
Where section number? No, only clause numbers. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay.
Assets, inventories, debts given, education 185, 186. Public deposits, cost record, statutory dues, unrecorded income, and it defaulted. 9 clause. Okay. Now 10th. So if this not change in the notes, please make the changes. It says 10, public offer. How do you make money through public offer? Through IP or FP. Okay. Now what do we say? Money raised through public offer or debt capital. If it is, see if it is written or not. Money raised through public offer or debt capital. Money raised through public offer. Public offer means IPO, FPO. Debt capital means bonds, debentures. Money raised through public offer or debt capital is used for proper purpose. Details of delays and rectification should be given. Please make the changes. Details of delays and rectification should be given. Okay. Now, number 2 point. Whether preferential allotment is complied as per section 62, whether private placement is complied as per section 42. Whether preferential allotment is complied with section 62, private placement is complied with section 42. This much only. 10th. 11th, fraud and whistleblowers. So fraud by the company, on the company. What will you say? Fraud by the company, fraud on the company. The nature and amount should be reported. Fraud by the company, on the company, nature and amount should be reported. Whether the auditor has filed ADT4 with the CG. Can you tell me? I have removed the mic.
At what amount do you report ADT4? Perfect. So if the fraud is minimum 1 CR, the auditor must have reported to CG. If ADT4 is filed to CG, you report in CARO also. Okay. In case of whistleblower complaints, in case of, yeah, tell me. If ADT4 is filed to the CG by the auditor, he will write in the CARO also that I have filed ADT4 to CG. Okay, I will give information to the members because CARO is given to members. Okay. Now,
Case of whistleblower complaints, whether the complaints have been considered by the auditor, whether you have seen to those complaints or not. Okay, 3 points in fraud. Fraud by the company, on the company, nature amount should be reported. If the auditor has filed ADT4, you will report in CARO. In case of whistleblower complaints, whether complaints have been considered by the auditor. Okay, so 10th may we raise money, 11, balle, we did fraud. 12, we gave it to Nidhi company, the type of a chit fund company. 2 points are here. Net own fund to deposit liability should be maximum 1:20, maximum 1:20 for meeting liabilities. Now how do you remember 12 clause? 1:20. 12 clause 1:20. Okay, so this is 12 clause 1:20. Just remember the ratio. Maximum, MCQ, correct, incorrect. Okay, they out of so many deposits what they have, minimum 10% they have to keep in unencumbered term deposits. Sir, unencumbered means without any charge. 90 pe they can take loan, 10 rupees pe they have to keep, out of 100, 10 rupees they have to keep for unencumbered term deposits. Okay. Now 13. Now when we have lot of money, relatives will come. So related party transaction section number is 88. 188888 related. 8888 related. So section 188 is complied with. If not, give details. If not, give details. Cool. 14. Internal audit department. Does the company have internal audit system? Does the company have internal audit system? Okay. Have the report of internal auditor been considered by the stat auditor? Now can you tell me, when do we have internal audit system?
when? DP2, where it is written? 138 section. When section 138 is applicable, you need to have an internal audit department, and if there is an internal audit department, the auditor
Should consider the report of internal auditor. Okay. So always remember the question says internal audit is applicable. That means CARO ka clause number 14 is also applicable then. Because you have to see, does the company have internal audit system? When will they have a system? When it is applicable. When it is applicable, when section 138 is applicable. Okay. So clause 14. So 10th was, guys, public offer. 11 was fraud. 12 we gave it to Nidhi. 13 we gave it to legislative. 14 we have an internal department. 15 non-cash. Only one point is there for non-cash. Whether the restriction, just check the word, whether you have written this, whether the restriction of section 192 is complied with or not. Yeah, section 138 there. For internal audit 138. Perfect. Whether restriction of section 192 is complied or not. 192 is CA final ka section. That's it. Now how do you remember non-cash? See, if the question says the company has given car, the company has given bicycle to the company has given furniture to the director. So rather than money, they have given some goods. So when some goods is given, it's a non-cash. For non-cash, you have to comply section 192, CA final section. Okay. Then how much is left of 45? After how much is left of? After everything, 45 is left on. So what is 45? Section 45 IA of RBI Act 1934. 45 IA of RBI Act 1934. Sir, has the company obtained registration from RBI? So this is what? This is for NBFC. Has the company obtained registration from RBI? Is the company carrying on non-banking or housing finance activities without certificate of registration? If it is exempted or unregistered, does it fulfill the criteria for exemption? If it is exempted, does it fulfill the criteria for exemption? So first two were linked, third is altogether different. Fourth, does the group to which company belongs have more than one CIC? CIC means core investment company. Then indicate the number of CICs in the group. CICs means when you invest only in group companies. When you invest only in group companies, like I will invest in Tata Power, Tata Sons, Tata Steels, everything in Tata. I will invest only in Adani, Adani Steel, Adani Power, Adani Corp, Adani Ports, everything in Adani only. That's core investment company. Okay. So this is clause number 16. Clause number 16. Okay. Let's recall all the 16 clauses. Fixed assets, inventory, debts given, adequacy of identified and fida, P is public deposits, C is cost records, statutory dues, unrecorded income, and it defaulted. Okay. Then after that 10th is public offer, 11th is fraud, 12th is we give it to Nidhi, 13 we give it to related party, 14 internally, 15 non-cash, 16 45 IA, 45 IA, 16 is done. 17. Has the company incurred cash losses in the current year, previous years? Give details. Has the company incurred cash losses for current year, previous years? Give details. Then, like other than depreciation, okay, you have to just give details in Caro report. 18. Resigning. 18 is resignation. So in case of resignation, has the auditor considered the issues, objections, concerns raised by the outgoing auditors? So in case of resignation, has the auditor, like you, when we are auditing, have you considered the issues, concerns, objections raised by the outgoing auditors? If you remember resignation, what is the form number that the previous auditor must have filed when resigning?
You can say I on the mic. Form number for resignation. 883, perfect. 883. So if
auditor go and check what were the issues, concerns, objections raised by the outgoing auditors. 19. If there is a material uncertainty exists, the auditor should give details. If there is material uncertainty exists, the auditor should give details. Like plastic industry, if it is getting banned in Maharashtra, so there is a material uncertainty in the business, you have to give details. Then, in your opinion, like in the opinion of the auditor, whether the company can meet out its liabilities which are due in future. Whether the company can meet out the liabilities which are due in future. Okay. Now, transfer to CSR fund under Schedule 7. So whether there is any unspent amount of CSR is transferred to special account under section 135. Now see, if you remember, minimum 2% of average net profit should be transferred to CSR. Now, if company has spent only 1.8, 0.2 is left, company can't take back that money. They have to keep it in a special account for 3 years. Then they can spend. Now imagine in that 3 years also they have not spent. Now it will go into a special account as per Schedule 7. So if there is any amount which is transferred to that special account as per Schedule 7, give details there. It's a government fund. Like we had IPF with the government, same way there is a special account of CSR with the government. But then the government will spend on your behalf. Okay. 21, important point. Okay. Read this point. It says qualification adverse remark in other group companies Caro report. In other group companies Caro report. See, how do you read this? If there is a qualification or adverse remark, if there is a qualification or adverse remark in other group companies Caro report, in other group companies Caro report which is included in CFS, give details of such companies and para numbers of respective Caro report containing the qualification and adverse remark. Like for example, A Limited is the holding company, B Limited is subsidiary, C Limited is associate, D Limited is wholly owned subsidiary. Now, in the iska Caro mein, clause number 7, 10, 11 is not complied. In this Caro, clause number 3, 7, 14 is not complied. Here, 4, 2, 8 is not complied. E Limited mein, everything is complied. Okay, everything is complied. Now, because you are a holding ka auditor, in clause number 21 you will say, because we have subsidiary B Limited, 7, 10, 11 not complied. In C Limited, 4, 2, 8 not complied. In D Limited, 3, 7, 14 not complied. Just you will do cross referencing. In this iska Caro, subsidiary ka auditor, In C Limited, iska auditor. In D Limited, they have said that this is not compliant. Only holding company ka auditor in his Caro report in clause number 21 he will write this. Okay, only holding company. Clear? It's a cross referencing. See, because holding company ka Caro will go to the members. Members will say, sir, we have subsidiary, we have invested. What is that subsidiary doing? Have they complied with Caro? Sir, if E Limited the thing is not written, what will the members assume? It is compliant. If it is not compliant, then you will just give cross referencing. Cool? Caro ka 21 clauses is done. Let's scribble out once. F, fixed assets. I, inventory. D, debts. A, adequacy of 185, 186. P, public deposits. C, cost records. Then statutory income. And 8, defaulted. So these are the 9 clauses. F, I, D, default. 4 is very important. Then public deposits important. Sorry, a public offer important. Public se we did fraud. We gave it to public offer, fraud, 10, 11, 12. We gave it to Nidhi. We gave it to related party, 13. 14, internal department. 15, non-cash. 16, section 45 IA of RBI Act 1934. 17, cash losses. 18, material uncertainty. 18, 17, 18, 19, sorry, 18 is resignation. 17, 18, 19 is material uncertainty. 20 is CSR. 21 is qualification or adverse remark. Done. All 21 points of Caro is in. I hope you will remember. I hope you understood. Ask me.
Any doubt on Caro? Okay, Caro is over. Shall we do one more chapter? What time you are available? Yeah, till what time I'm asking? So sir is not taking the next class. Okay, cool. So let's do accounts of company, small topic. It will take 45-50 minutes. Cool. Accounts of companies.
One second. Huh?
Can we take a 2-minute break?
Now, accounts of companies. Okay, so accounts of company, people will find that this is not a chapter in the module, it is a part of company audit, chapter number 5. Okay, you need to understand the ICI has been asking questions on this concepts also. Majority of you must have not done this chapter, but please do it. It can help you in MCQ also, plus correct incorrect also. So how many sections we have to do? This is a common chapter with interlaw. So if you have cleared interlaw, you just need to recall. In interlaw there will be 134 to 137 also. You don't have to study this for audit paper. Don't study for audit paper. Only you will study from 128 to 133 and then section 138. Then section 130. Okay. 34, 35, 36, 37 is for law. Now see. Internal auditors. So section number is 138. 138 internal auditor. We just did Caro. Clause number 14. So if when is internal audit applicable? See, stat audit is applicable for every company. Stat audit is applicable for every company. Okay, but internal audit is applicable only to following categories: listed, unlisted, public, private. Listed, unlisted, public, private. Listed में don't check any limit. Automatically it is applicable. But unlisted public में we have to see DP ले तू. D is deposit, P is paid up share capital, L is loan, T is turnover. DP ले तू, deposits, paid up share capital, loans, turnover. Private में ले तू, loans, turnover. Figures are 25, 50, 100, 200. 25, 50, 100, 200. Double. 25, 50, 50 ka double, 100, 100 ka double, 200. Here 100, 200. Two things you need to remember. Loans have to be seen and deposit have to be seen at any point of time. Loans and deposit have to be seen at any point of time. Loans and deposit have to be seen at any point of time, and loans is exceeding 100 crores. Deposits is 25, paid up capital is 50, turnover is 200 minimum. Loans and loans in both the categories exceeding. Now when you say exceeding means 100 crores and 1 rupee. 100 crore and 1 rupee. Then only loan, if the loan condition is satisfied, then only internal audit would be applicable. If it is exact 100 crores, internal audit is not applicable. It is 100 crores and 1 rupee. Okay. Deposit loan at any point of time. Then internal auditor can be any person. Internal auditor can be any person. Okay. Now a body corporate can also be an internal auditor. A body corporate means a company can also be an internal auditor of a company. Achha, can a company audit stat audit? Can a company become a stat auditor of another company? No, because it is disqualified. Body corporate is disqualified. Here, a company can become internal auditor of another company. MCQ. Okay. 138 section. 133 very small simple section. Central government to prescribe accounting standard. Now, very rare section. See, whenever there is a Ind AS or AS applicable, it will always be notified through section 133. So it says, as per section 133 of Companies Act, central government has the power to prescribe accounting standards, including any addendum. Addendum means any additions, any extra part, as recommended by ICI in consultation with NAFRA. As recommended by ICI in consultation with NAFRA. So CG will prescribe the AS. Okay, section 133. Then 130. So 130 we did, 133 we did. Now 130. Reopening of accounts. Accounts are closed. Now you have to reopen. Always remember, reopening would be done only if an order is passed by court or tribunal. Only by court or tribunal. How many people can reopen? Sir, 5 people can reopen. What are the grounds? There are 2 grounds. Ground for reopening are, number 1, if the accounts are prepared in fraudulent manner. You have evidence that the accounts are prepared in fraudulent manner, or the affairs of the company are mismanaged during the relevant period, thereby casting a doubt on the reliability of FS. There's a doubt on the reliability of FS. The accounts are prepared in fraudulent manner, or the accounts are prepared in such a manner that they were casting a doubt on the reliability of FS. Now, who will apply for reopening? 5 people. How many are those 5 people? I mean, who are those 5 people? CG, income tax, SEBI, regulator, any other person concerned. CG, income tax, SEBI, regulator, any other person concerned. Only these 5 people can reopen it. So for how many years? Any of the last 8 years they can reopen. But if the CG have told to keep the books for 20 years, then they can open for any of the such longer period. Any of the such longer period. 2 points are very important. Who can pass order for reopening? I mean, court and tribunal can pass, but who can apply? Only these 5 people can apply. CG, income tax, SEBI, regulator, any other person concerned. Very, very, very important. Now, section 131, voluntary revision of FS or board report. Voluntary revision of FS or board report. So, voluntary revision means like on its own. You want to do it on your own. 2 sections have been non-compliant. One is 129, one is 134. One is 129, one is 134. If it appears to the directors of companies that the FS of the company or the board report do not comply with 2 sections, section 129 or 134, then they can apply to tribunal for seeking approval for revision. Always remember, in both the cases, approval would be given by court or tribunal. MCQ. Don't get confused with CG. CG does not give approval here. Tribunal or court will give it. 90% of the answer would be tribunal only. Tribunal will give the approval. Tribunal means NCLT, National Company Law Tribunal. Now, if it appears to the directors of the company that the affairs of company, that the financial statements of the company or the board report is not complied with section 129 or 134, they will apply to tribunal for revision. The tribunal will give notice to CG and income tax and seek their representations, if any. Like, CG, you have a problem, income tax, you have a problem, please let me know, I am giving the approval. Sir, what are the grounds? The copy of tribunal order shall be filed with ROC. It can be made for any of the 3 preceding financial year, any of the 3 preceding financial year, and it can be done only once. It can be done only once. Always remember, only once, only once, only once. Okay, BUA can be reopened for how many years? BUA can be reopened for how many years?
Can be opened for 8 years. BUA can be reopened for 8 years. Revision 3 years. Revision 3 years. Voluntary revision 3 years. FS or board report ka revision is 3 years. Any of the 3 years, okay? And it can be done only once. You can talk. I have removed the mic. No, this is voluntary revision. That is when authority there. In review, you're opening BUA, not FS. BUA, journal, ledger, all those. Out of BUA we prepare FS, and when the FS is given to someone, see it's written here, This section will be useful only if the FS or board is sent to either members or delivered to ROC. If you have given it somewhere, Hua, you must have filed like 5 years have passed, 6 years have passed. Like income tax, they can reopen the Hua any like in the last 8 years. The FS of the board report shall state it is a revised FS or board report as the case may be. It should state that it is a revised FS or board. Yeah, but then income tax will give the order now what you have to do. Like undisclosed income. Imagine raid has happened. Sorry? 130 is your revising your income tax has passed the order for revision. So what you do is you don't revise the past year's accounts. You disclose that income in the current year. You remember Karoka clause, unrecorded income, right? So Hua is reopened. There is an income which was not recorded. So in this year, in the current year, you will record that income. You're not changing that year ka FS. In this, you are changing that year ka FS. Yes, yes, yes. And here in 131, it is voluntary revision. Like company wants to do. There, CG income tax every regulatory any the person concerned wants to apply. Both the case mein tribunal will give the approval. Very important MCQ. Tribunal will give the approval. Okay, both the case. Cool.
132 NAFRA. 132 NAFRA. The CG will constitute NAFRA. It will consist of a chairman and 15 other members. Chairman and 15 other members. Total 16 members ka team. 16. Okay. With being part-time and full-time members as may be prescribed. The chairman and the members who are in full-time employment with NAFRA shall not be associated with any of the firm, including related consultancy firm. Okay. You should not be associated with that any CA firm. Kab? During the course of appointment when you are in NAFRA and after 2 years also. Like you have left the NAFRA 2 years after ceasing to hold such appointment. So you can't be a part of a CA firm when you are part of NAFRA. Now when you have left NAFRA, still for 2 years you can't be a part of any CA firm. You work in a corporate, you retire, you sit, you chill in the home, but you can't be a part of CA firm. Okay. Now if a professional or other misconduct is proved, NAFRA will levy penalty on individual CA minimum 1 lakh, maximum 5 times the fees received. For firm 5 lakhs 10 times the fees received. How do you remember? 1, 5, 5, 10. 1, 5, 5, 10. 1 lakh 5 times. 5 lakh 10 times. 1 lakh 5 times. 5 lakh 10 times. 1, 5, 5, 10. 1, 5, 5 times. And plus sir, they will debar the member. They will debar the member of the firm for how many years? So minimum 6 months, maximum 10 years. Minimum 6 months, maximum 10 years. Minimum 6 months, 10 years, maximum 10 years. Sir, for what? So you can't be the stat auditor, you can't be the internal auditor, you can't be the tax auditor, you can't be any auditor, you can't be a registered valuer. You can't be anything. You can't be anything. So they will debar you from minimum 6 months, maximum 10 years. This is the power of NAFRA. This is the power of NAFRA. Then NAFRA has a power to investigate the auditors of following companies. Now this is, they have asked in the exam law paper also, audit paper also. See, NAFRA is my bap of CAs now. Okay, grandfather, godfather. NAFRA can do anything with them. So NAFRA will investigate these people. So the list is of the company. NAFRA will not investigate these people. NAFRA will investigate the statutory auditor of these companies. Okay. NAFRA has a power to investigate the auditor of following companies. When I say auditor of following companies, matlab statutory auditor of following companies. Okay. Listed company in India, outside India. Unlisted public company having capital 500 crores or turnover 1000 crores or loans 500 crores. When you have to check loan? 31st March. Every data 31st March. Caro mein, private company mein loan. When do you check loan?
Any time of the day.
At any point of time. At any point of time. Okay. Here you check it on 31st March. Banking, insurance, electricity, company governed by special act. Banking, insurance, electricity, company governed by special act. Company like LIC, UTI, IDFC. They will not investigate these companies. They will investigate the statutory auditor of these companies. Then, any other body corporate like CJ may prescribe, or foreign subsidiary or foreign associate of this A to D, like this company ka foreign subsidiary, foreign associate, if that associate or subsidiary has income of more than 20% of consolidated income or net worth of more than 20% of consolidated net worth. Income of more than 20% of consolidated income or net worth of more than 20% of consolidated net worth. Okay. So NAFRA has a power to investigate this company ka statutory order, section 132. Okay. Now see.
Is this important?
130 is reopening of accounts. We did that. 5 people can apply. Tribunal will pass the order. 8 years. 131 voluntary revision. Company will do it on its own. Any of the 3 years. 132 NAFRA. We did right now. NAFRA mein investigation wala answer important. MCQ correct incorrect. 133 CG to prescribe AS. CG to prescribe AS. Okay. Then 138 is your internal auditor. Last 2 sections we are left with 128 and 129.
So wait, is NAFRA important?
So proper books of accounts. 128 is books of accounts. Proper books of accounts, when it is proper books, when it is giving true and fair view, when it is prepared on double entry, when it is prepared on accrual basis. NAFRA ka investigation wala point is important. Like there are 5 categories. And 2 years mein you can't be a part. During the course also and leaving after 2 years also. Okay. Now, place of keeping. BUA should be kept at the register office or any other place in India. See, BUA should be kept at register office or any other place in India. Okay. Board shall pass a board resolution. When you want to keep the books in any other place in India, board will pass a board resolution. You will intimate to ROC within 7 days in form number AOC 5. In form number AOC 5. AOC means accounts of companies 5. Then in case of branches, in case of foreign branches, the company have to send summarized return to the head office at quarter intervals. The foreign branches have to send summarized return at quarter intervals. Then BUA can be kept in electronic form. It shall be remain accessible in India so as to be used for a subsequent reference and shall be capable of being displayed in a legible form. Like you can keep BUA in electronic form, okay? Like Tally, Excel. Any information received from branches like foreign branches shall not be altered and shall be kept in a manner which shall depict what was originally received from the branches. Like I have a branch in, let us assume, Germany. So they will send me the accounts in German language, right? So one original copy I have to keep. I will translate them in English, but one original copy I have to keep. Then there shall be a proper system for storage, retrieval, display, printer of the electronic records. Like I pass the entry, I can remove the printout, storage, retrieval. I should be having a proper system. Then at the time of filing annual financial statements to ROC, the company should provide the following information for the maintenance of records. What it is? Name of the service provider, IP address of the service provider, location of the service provider, address of cloud. Now when you say annual financial statement, that means in a year once you are giving it. Okay. Then BUA shall be kept for 8 years. We did that. If the company is in existence for 2 years, then for 2 years. Existence for 3 years, 3 years. CG says 30 years, then 30 years. Okay. It should be kept for such longer period as may be directed by CG. Then who can inspect BUA? Always remember, only a director can inspect BUA. Sir, where the BUA is kept? Where it is kept? Register office or any other place. Only during your business hours. In case of foreign financial information, director will give request to the company. Company will give the information within 15 days asking for information period. Like I need July, August, September ka purchase sale of London branch. So he can't go to London. He have to request to the company. Company will give the information within 15 days. You are my director, you want to inspect subsidiary ka BUA, my subsidiary ka BUA. Not allowed. So director cannot inspect subsidiary ka BUA. But if you want to inspect, company will pass a board resolution. Which company, sir? Holding company. Holding company will pass a board resolution specifying the director, specifically authorizing to inspect the BUA. 15 days. Here it is 15 days. Company will give the information within 15 days. 1 second. Tell me.
Information period, right? If I am a director, I want to know London branch ka purchase sales of July, August, September. So I will tell them I need purchase sale of July, August, September. Company will give me that information within 15 days. So director will make a request stating the information and period to the company. Company will give the information within 15 days. Then subsidiary
Directly, you have holding company will pass a board resolution. Now who are the person responsible for 128? MD, whole time director in charge of finance, CFO, any person authorized by board. MD, whole time director, CFO, any person authorized by board. If 128 is contravened, then every officer who, I'll call those 4 people, will be responsible for minimum 50, maximum 5 lakh. Minimum 50, maximum 5 lakh. No shareholder or agent, MCQ, no shareholder holding 80%, 90%, 95% of the company cannot inspect BUA. Only a director, only a director, only a director can inspect BUA. No shareholder, agent of a director can inspect BUA. Only a director can inspect BUA. Okay. In 129, it's only a read section. You can read from the notes or from the material, study material. Just remember one section or in one point here. This point, they can ask you in MCQ. What does FS means? Sir, FS means balance sheet, P&L, cash flow, notes, SOKI. Balance sheet, P&L, cash flow, notes, SOKI. Now, OPC, small company, dormant company, startup private company may not include cash flow statement. MCQ, correct, incorrect. I have a question in front of on the screen. ABP Limited, capital 3 crores, turnover 35 crores. They have not filed cash flow statement. They have not attached cash flow statement. Did they comply this section of 129 or contravened?
Complied, contravened. You can talk to me. ABP Limited, capital is 3 crores, turnover is 35 crores. They have not filed cash flow statement. Is section 129 complied or contravened? Complied. Why? Correct. It is a small company. Now, how do you remember small company? Less than 4 crores, less than 40 crores. Less than equal to 4 crores, less than equal to 40 crores, right? So it is up to 4 crores or up to 40 and up to 40 crores. Then you are a small company. If you are a small company, you are exempted. So they will not say small company. They will give the figure. Only this much you have to remember. Whoever does not have, you can click the photo. Sorry. This we have marked now once. This is the first point. You have not marked. Please mark it. This is the first point. This is second. This is third. Then cancel the above part. This is fourth. This is fifth. They can't ask you any question. Just like reading concept. Then cancel this circular by notification. This is sixth. Cancel this. Persons covered 7, punishment 8. Cool.
One more chapter. There are 6-7 sections which you need to do it. It is a part of company audit chapter. In the module, it is they not given a separate chapter. In my book, it is a separate chapter. Please do it. They can ask you for 2-3 marks. MCQ, correct, incorrect. Okay. One more chapter is done, guys. Shall we stop the class here? We continue next time. Bye.